All right, cool. So, yo, what is up for everyone on the YouTube replay? I hope you're having a great day. The market isn't having too great of a day. Jerome Powell did just speak, but let me give you a quick portfolio update. Then I'll show you some stocks I actually just bought. I bought 3 companies, and one stock is a brand new position for me. I'll give you a quick glance at that. So check this out right here. If we go into our Webull portfolio, we have a new position, PODD. Pretty interesting company. We bought another share of CALM, and I'll save the other one for later. And check out this portfolio. Also not doing too great on the day. We are down 1.27%. And here's our lifetime return. We're only up 16% all time in here. So we really haven't been outperforming the market. Yeah, look at today. Reddit's down 6, UiPath 3, Dave 2.5, Tap. So yeah, there are some Toast has been struggling as well. I saw that company. And then finally, we have our Robinhood portfolio, or known as our dividend-only portfolio at the top here. And it is down 0.5% today. So yeah, most of our portfolios are red on the day. Yo, what up, Looney? Good to see you, my friend. Man, you started this at the perfect time. Hey, what up, Plasma? So yeah, check this out. Year to date, we are up 15%, and we're down 0.5% on the day. And here's our portfolio. The only stock green is actually United Rentals. It's looking like McDonald's might go green on the day. Who knows? But yeah, check this out as well. We have our Roth IRA, which is actually at a new all-time high today. Believe it or not, I don't know how that works. But I mean, the market is at all-time highs. But that's mainly from Innodata. This stock just continues to climb. It is literally up 95% in just 1 month. So yeah, check this out. We're up 123% all-time in here. So do you know Looney? I'm talking about Looney Zone. He's one, shout out to Looney Zone on the YouTube stream. He's my he's a member on there. I appreciate that. So yeah, he said, can we check out KVUE, the owner of Tylenol? Yeah, so we heard today that apparently Tylenol, you shouldn't take if you're pregnant or whatever. They want to put a don't take if pregnant label on it. And I've actually was looking into this business today. They own a lot of businesses like Neutrogena, Tylenol, a lot of popular brands like that, which actually the company hasn't been doing too well. Unfortunately, I think this one might have an unsustainable dividend as well. One thing a lot of people like is check out the yield. You get a 4.7% dividend yield here, but check this out right here. If we go to their self-care business, that is actually down 4.8% year over year. And the essential health business is where Tylenol is in. It's like 1/3 of this. It's like 10% of their net income or something. So it's like 10% of the total business, I believe, if I remember correctly. But that one is down 3% year over year. And then finally, we have their skin and beauty products, but they own like Neutrogena, and that's down 4% year over year. So overall, the business just isn't really growing. This was a spinoff from Johnson & Johnson. Johnson & Johnson gave them a lot of debt. So one thing I don't love to see is the declining revenue. But let's see their profits. So yeah, they're making $300 to $400 million in net income a quarter. Let me actually go check how much the dividend costs. So they made $400 million this quarter, and the dividend cost exactly $393 million. So nearly exactly $400 million. So actually the previous quarter and the previous quarter, they couldn't afford the dividend. So they could afford it this quarter, but they barely had any leftover cash. Like they made $420 million, but the dividend ate up like 90% of that. So I don't know. I'd be careful with this name. Nothing's really blowing me away here. You know, I would find maybe another healthcare stock if you're looking for just exposure to like ibuprofen or something. But hey, what up? Crazy Cat said Neo stock. Hey, I actually don't love this name right here. I actually got the notification this time that you went live. Oh, that's, YouTube normally doesn't give out the notification, so that's awesome. I hope y'all are having a great day. Thinking of buying Salesforce. Ooh, we can look at Salesforce too. So here's Neo. Here's honestly a stock I would be very careful with. They're Chinese, first of all, so it's an ADR. So you pay a yearly ADR fee. But here's the main reason I'm a little worried about Neo. So it's a $17 billion company. So they actually have a pretty big market cap. But this is the part that's not great. And this is in USDF, converted the currency from Chinese to USD. And they lose $700 million to $900 million a quarter, and they've basically been doing that for all of eternity. Just been burning through hundreds of millions or nearly $1 billion of net income a quarter. It's leveraged up their balance sheet. Like they used to have this 75 to 80% liability ratio. Now it's 93. But one reason the stock is really rallying up recently because they got a bunch of like new orders or something. They had like $100,000 pre-orders of like their new EV SUV or something. Yeah, actually number 2 right here. Neo's new SUV receives 100,000 pre-orders. Pretty interesting. Hopefully that can get them to profitability, but I'm pretty sure every car that they sell, they actually lose money on, unfortunately. Oh, let's see here. Yeah, that payout ratio isn't too great on them. Yo, what up, Ollie? He said Grab stock. Yo, I love Grab. This is actually like an Uber competitor. Actually, no, they're more like an Uber beneficiary because check this out right here. If you're wondering what does Grab do, they literally do the exact same thing as Uber, but in all these other countries. Notice the US and Canada aren't on here. They're in Malaysia, Indonesia, Singapore. So you get exposure to all these other countries. And the most coolest thing about this stock, in my opinion, is the fact that Uber bought them. Uber is the largest shareholder. They own 13% of all the shares. Toyota Motor owns 5.5%, but this gave Uber instant international diversification, which is really smart. They're making net income every quarter. They're growthy. Sales are up 23 after going 17. Free cash flow is really good as well. So I actually really like Grab. They're kind of backed by Uber. Where do you see all these reports from? Oh, hey, yeah, if you want to get this app I'm on, it's in the link tree in my bio, the first link there. It's a brokerage. But yeah, let's look at Salesforce right here, CRM. So this is one of the software names that have really been getting hurt by AI because they say like AI might hurt the agentic AI or whatever will hurt Salesforce or whatever. They really rely on the white collar job market. But check this out. I actually think they're a pretty good maybe buy the dip opportunity right here. I think they could go lower, to be honest with you, but I think the risk reward looks pretty good to nibble on it at this price right now. So they own some great assets. They own Slack. Like check out how diversified that they are. They're in services, sales, platform and other, integration, analytics, marketing, commerce. So they're in all these different industries. They're also growing margins. Like if you look at the revenue is up 9.7% year over year, but the net income is up by 32. So they were actually able to grow their margins to a new record, 1.9 billion in net income. You get a small dividend too. But if we go look at the PE ratio right here, the PE is still a bit high. They trade at 35 times net income. Honestly, I think that's pretty justified. 35 times net income for Salesforce. That's actually pretty fair. Your Innodata stock was amazing. Oh, hey, yeah, dude, Innodata has been going crazy. They're actually at a new all-time high today. This is crazy. This stock is up 95% in just a month. So I made a YouTube video about this one a long time ago. So I'll actually be really quick about Innodata, just because, I certainly wouldn't buy this one at all-time highs, but I'll give you a quick explanation on why they're at all-time highs. There's been a lot of institutional buying recently, but the fundamentals align with the increasing stock price. Like if you go to their revenue right here, where does it come from? 86% of the revenue comes from their digital data solutions, and this business is booming. It's up 99% year over year after growing 92. So the business is at a record. And if we go down here to the sales, it's up 79% year over year to 58 million in revenue. So they made 58 million this quarter, a record. The analysts are expecting 71 million in 2 quarters. So they're expecting a lot of growth and they're beating. Look at this. The orange line's what the analysts expect. They're beating on every expectation. They're beating on EBITDA, net income, revenue. And yeah, I forgot to mention they're profitable. They're actually making net income every quarter. They have an absolute monster of a balance sheet. So I'm really not shocked to see this stock at all-time highs. Certainly wouldn't touch it here. Oh, and 5 of the Magnificent 7 are customers of them. I think it's either Meta or Google is their biggest customer. Nvidia is a customer. Microsoft, Amazon, they're all 5 of the Magnificent 7 are customers of them, which is kind of cool. So yeah. Hey, what up, Two Trick? How's it going, man? And hey, what up, JVM? He said KLAR. Is that the buy now, pay later stock? So I wish I could give you more thoughts on this company. So they just IPO'd, so we don't get too much metrics for this company, too much data. But here's the little bit of metrics we do have. We can see that the revenue is up 21% year over year. They are losing net income, but not much net income. We saw a firm get really profitable. Okay balance sheet, probably normal for this industry. So if you're looking for a buy now, pay later stock, Klarna is one. Another one that might be better. We just got to wait for more financials for me to really give you thoughts on them. But Affirm, this is one of the buy now, pay later stocks that actually just went profitable. I'm pretty sure they've partnered with Amazon or something, but this one's really growthy. Sales are up 33 after growing 47. We look at the net income. They just got net income positive. If we zoom out to last year, they were losing 100 to 200 mil a quarter, but now they're finally making good profits every quarter. So Affirm's your other buy now, pay later stock if you like that industry. So, hey, what up, Luffy? What up, dude? He said Serve Robotics. So I actually don't love Serve Robotics. They're kind of a small cap, no real patents. But right now, in this environment with like S&P at all-time highs, this is a good momentum play, but not one I really trust fundamentally. So if you look in the top right, they're a $780 million company. Kind of remember that number? They're worth $780 million. And this is kind of what you're buying. Like the business did $600,000 of revenue this quarter. They lost 20 mil in net income. So do beware, like the revenue is really low. What are the expectations? Yeah, the expectation is it goes to 2 million. So that's at least good. But it's just really hard to pay 700 mil. What's the balance sheet? Actually, it's probably a fortress because of the dilution. Yep, check that out right there. Literally no debt at all on this company and a ton of cash. How are they getting this cash? Well, I bet if we go to the cash from financing activities, it's going to be super positive from dilution. Yep, so they're diluting you like, wow. They're diluting you. They've diluted you by 25% of the entire market cap in the past year. Oh, but look at that. This is actually super interesting. Uber is the largest shareholder. Uber owns 8% of Serve. We also just saw Uber owns 13% of Grab. Uber's buying everything. Hey, what up, Ron? What's up, dude? Hey, Ishwar, what's up, man? He said APLD. Yeah, that's in the NVIDIA ecosystem. And that stock, didn't it go crazy yesterday? So let's go to the NVIDIA portfolio right here. Yo, what up, Gerp? He said Take Two. Hey, Cruz, what's up, man? Yeah, we'll look at Take Two after this. They're a cool stock. So here's APLD. They, look at yesterday's candle. It was pretty insane. So this was on par. They rallied because NVIDIA signed $100 billion, or they did $100 billion investment into OpenAI. And I guess some of that will trickle down to APLD because, NVIDIA owns APLD, and NVIDIA got APLD a huge partnership with CoreWeave. So they've really benefited from being in the NVIDIA ecosystem. Super momentum right now. I wouldn't touch this one over $20 a share, really. It just seems so overbought. But congrats if you're in this name. I mean, they deserve this huge rally. Yesterday, I don't know if there was any specific news. I think they here's cool. APLD reports full year 2025 results, or fiscal year, signs CoreWeave data center deal. Anyway, yesterday's 17% rally is like the momentum. There was no real fundamental change, or maybe there will be. I'd just be careful with that name at this price. So let's look at this one, TTWO. This is Take-Two Interactive. You've probably heard of this company before, not knowing it. So this is the stock that owns Rockstar Games. Hey, what up, big man? It's good to see you. So this company owns Rockstar Games, and that owns GTA 5, Red Dead Redemption, and GTA 6 is about to be released. And that's actually why this stock is at an all-time high. It's anticipating all the revenue that they're about to bring in from GTA 6, which is supposed to be one of the top 5 legit biggest games of all time. So that's kind of why the stock has rallied so much, anticipating that huge revenue growth, because whenever they release that game, it's just instant billions of dollars. Because right now, fundamentals aren't too good, losing money every quarter. But it's really so forward-looking. Honestly, I think it's really priced in all the revenue, so I wouldn't touch it at this price. What was the previous company's name? Hey, I forgot. By the way, if you missed anything, you can go on my YouTube stream and replay it. You can rewind it. Yeah, I'm streaming on YouTube. My YouTube channel is called Nathan Robert. That's the number one way to support me. Just subscribe to my YouTube channel. So what's a good buy today stock? Yo, here's actually some stocks I bought today. Actually, this one's a bit of I forgot to share this. So this one's a bit of a riskier play, but I'm looking more into this company. I bought 2 shares of PODD. I didn't feel great about buying them at their current valuation, but a stock I did feel great about buying at its current valuation is, guess what? I just loaded the boat on SFM, Sprouts Farmers Market. Check this out. Yesterday, I bought 2 shares at $119 each. And what's it today? Well, it's $118. So I'm down a little bit on my position. So I bought 2 shares of Sprouts Farmers Market. It's like a healthy grocery store. And then the other last stock I bought was more shares of TAP Molson. It's one of the higher. These are some of the more dividend yielding stocks that don't really outperform the S&P in the long run. But yeah, you get a 4.25% dividend with this stock. They're a drink company. Anyway, so let's see here. Solana. Yo, hey, we don't really look at crypto on here. And hey, what up, Dylan? He said, open door. Let's do it. Open Door is a huge momentum name. Hey, what up, John? Good to see you. How's the portfolio doing? Not great today. We're down like 1% on the day, but that's all right because we hit an all-time high yesterday. So yeah, here's Open Door. This is a huge momentum company, and they've really been rallying on the hype of that interest rate cut we got last month. And they're really rallying on the rate cut path trajectory that really benefits the real estate market, because what does this company do? Well, they just flip houses. And what happened last time we were in a super low interest rate environment? Well, they printed money and had extreme growth. I mean, they were doing 4 to 5 billion of revenue a quarter. But then look what happened as rates hiked up. It's a super interest rate sensitive sector. The sales, they plummeted down 69, down 70%. They've kind of been flat since, and they're still a money loser. You know, we go to the net income. They're losing net income every quarter. So honestly, this is just momentum right now. I'd trade this one. I wouldn't buy and hold that one for the long run. If I wanted exposure to real estate, I'd probably pick a home builder over that one. But that one's so momentum-y, you just like trade that one. What's your average cost on Toast? Hey, yeah, great question. If you ever want me to share anything, let me know. So yeah, here's my average cost basis on Toast. We're actually down 2% on it. So $38.99 is my average cost on Toast. Oh, and the other stock I bought was one more share of CALM. System is busy. Okay, there we go. Yeah, I bought it one share at $100. You know, I was buying some shares earlier at $90, but you know, I didn't mind. It's a good stock at a good valuation. In my opinion, you know, nothing's financial advice. So I bought one more share of Calm. If you're wondering what does this company do, they have a crazy yield and 8.5% dividend. They trade at 6 times forward net income. They have no debt. 30% of the entire market cap is just their cash on hand. And what do? Well, they sell chicken eggs. That's literally all they do. They have a 20% chicken egg market share in the US, and they're pretty cool. So they just sell a commodity. That's why the low PE, but pretty cool. Bought one more share of them. Yeah, what up, Lulu? Yeah, we did buy. What's your all-time portfolio performance? Well, I have multiple portfolios. I'll be super quick about this but yeah, here's my total performance in this portfolio right here. It's kind of in the top left. Open profit and loss. We're up 15% all time in that account. But this portfolio, that's our risky account. But this right here is our buy and never sell portfolio. And this one has been on an absolute monster tear. We're up 132% all time on here on a money weighted basis. We started this portfolio on May 31st, 2023. And here's how, you know, you start your portfolio out small, like it was $160, and then all these blue dots here is every day I deposited. So for the longest time, my portfolio was like a couple thousand, and then just slowly increases over time. Compound interest is crazy. So anyway, let's keep going here. Look at some more stocks. AutoZone came out with their earnings report today. Yo, I love AutoZone. You know, even in a recession, people still got to go get their car fixed, oil changed, whatever, and battery replaced. And AutoZone, it's a really boring company, but this stock price appreciation is not boring. If you're wondering how is this stock go up so much, it's because they solely spend all their profits. Like they have a rule, I think they return like 75% of all the money they make to the shareholder via share buybacks. And they trade at 28 times net income. That's pretty fair. Remember, whenever you do share buybacks, that artificially makes the PE look lower. But check this out right here. They're making, you know, 5 to 800 million of net income a quarter. What is AutoZone, of course, doing with all that money? Well, like I said, they legit just spend it all, go to the cash flow statement, and yeah, they just deploy it all in share buybacks. Just for history, like they were nearly spending $1 billion on buybacks a quarter. So, and you know, $1 billion a quarter is pretty significant when you're worth $67 billion. You know, that's, if this company decided to pay a dividend with all that money, you'd be getting like a 4 to 5% dividend yield. But anyway, let's check out Blackstone. What up, Dixon? He said BLK, Blackstone, right? So, oh no, Blackstone. Is it BS or what's the ticker? You know what? I'll just type it in. Blackstone. So this is, yeah, BX. This is like an asset manager, sort of like BlackRock, but this is Blackstone. What's the yield on this company? You get wow, that's a nice yield, a 2.2% dividend yield. The dividend yield is lower than it was in 2022. So they had to cut their dividend, but hey, it doesn't matter. The stock is doing great. Let's see. They're trading at 49 times net income. Yeah, they're just like BlackRock, where most of their revenue comes from their private equity. Then their real estate business is really big. BlackRock has now over here like their ETF businesses, but yeah, they have their real estate, credit, and insurance. How's that doing? That's up 15% year over year. Pretty cool. They're in Okay, well, net realized gains, all right, all that. So anyway, if we go to the net income down here, yeah, they're making consistent net income. Like, if you kind of average it out here, they're making like 1.5 billion in net income a quarter. Sales are up 32% year over year, so it's nice to see the growth. The revenue probably will get choppy just because the revenue is like a bit comes from insurance and real estate. But overall, they probably have some good assets. You get a nice 2% plus yield there. I haven't done more research on them, but I do really like BlackRock stock, BLK. I'd maybe buy them more. But yeah, platform. Oh yeah, hey, if you want to get this software I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on. It's called a brokerage. So yeah, if you want to get this app I'm on, link tree in bio, first link there. Let's see. Ooh, Iran. Yo, what up, Too Trick? He said Iris Energy. Yo, this is one of the data center plays. They have like capacity for like 60,000. They're at like right now like 20,000 Blackwell chips, but they're like have capacity for 60,000 or something. And let's see, what's this right here? Iran expands AI cloud capacity with 12.4K new GPUs. Oh, including, look, the NVIDIA Blackwells and AMD chips. Pretty cool. Anyway, this stock, if you're ever looking at a company and you're like, wow, that's crazy chart, they're at an all-time high. Did they deserve to be at an all-time high? Well, here's why I think so. I certainly wouldn't buy them at this valuation, but here's what's so impressive. Like, this is crazy. The revenue went from 56 million to 186 million year over year. Like, this growth of the revenue like justifies the increasing stock price, in my opinion. And then not just the revenues that's growing, but also the profits. Look at that. They made net income the past 3 quarters when they used to kind of lose money. So they've really turned around the business in a short amount of time that analysts really didn't expect. And that's why they had this huge slingshot straight to the moon the past couple months, because they're really repricing the whole business because it's way more growthy than we once thought. Hey, what up, Cruz? Good to see you, man. Hope you're having a great day. Let's check out Rocket Lab. Yeah, if you're looking for a space stock, this is one of my favorite ones. As someone said, yeah, Ralphie, great point. It says, if you're in it for the long term, does the price matter? Not really. Like, honestly, like I've been buying more. I've been dollar cost averaging up on a lot of my positions just because they're so great. Like Google, Amazon. I plan to just buy and hold these forever anyway. So why not just buy another share of Google? Anyway, good point there. Here's Rocket Lab. But sometimes, it doesn't feel great buying a stock at a high valuation. But here's Rocket Lab. One of my favorite, actually, it is my favorite space stock. Like, I'd stay away from ASTS. I'd stay away from Lunar. I'd go with Rocket Lab, in my opinion, because they have shown the most growth and it looks the safest to me. And they're beating on expectations as well. Like the orange lines with the analysts expect, they just beat on revenue. They still lose a bit of money. But check this out. Their space systems revenue is most of their business, 67%. And it's growing like crazy, up 30% after going 94, after going 9, after going 1,800. Like, the growth is insane on their space systems business, and not just on the space systems business, but also their launch services. Check this out. 33% of the revenue is what it is now. It's up 58% year over year to a new record. It's never been over 46 million before. So yeah, I really like the growth here. They are still a money loser. They still lose a lot of net income, but I think it's okay for right now because of how growthy the business is. And they just acquired Geost. The Geost acquisition should add even more growth. Do you always do market analysis every day? Yeah, Joy. Yes. If you want to hit the follow button, we stream every single day. We just look at stocks and stuff. I love being fully transparent with my portfolios. By the way, I sell nothing. I don't have like a course, a book, a private, anything. I'm just on here to give my opinion. So best way to support me though is just hit the follow button, hit the like button, and subscribe to my YouTube channel if you want. I'm streaming on YouTube as well. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yo, what up, Remco? He said VRSK. Let's do it. VRSK stock. So this is Verisk Analytics. I've never heard of this company actually, but let's go check them out right here. This company is worth $33 billion. They have been struggling the past couple months here. So they reported earnings and fell on it. So let's go see what numbers they actually reported. So they beat on revenue, they beat on net income, and they beat on EBITDA. So they triple beat, then one reason the stock could have fallen on earnings is because they gave bad guidance. That's what ASML did, the Trade Desk did, Chipotle, Lululemon. They had some all right earnings, but that forward guidance was tough. But so sales are up 7.8, not too shabby. They're really net income positive. They're actually, this is good news. They're making through like 250 million in net income a quarter. What's the multiple? They traded 37 times net income. This is a bit of an odd balance sheet too, a bit leveraged. They might still be a little expensive, like 37 times net income for Mid high single digit sales growth. Net income did fall 17% year over year. So maybe the margins fell a slight bit. Yeah, margin went from 42 to 32. So I don't know. It could maybe fall a little lower, but maybe they're worth looking into. I like that they make a lot of net income every quarter. Hopefully that was helpful. So hey, what up? Hey, Celebrate. What up, dude? He said COHR stock. So this is Coherent. Yeah, I forget what this company does. So let's go find out what they do again. So a $17 billion company. The company is nearly at an all-time high. So congrats if you own that one. They do, they're in networking. Oh, I remember this business now. So yeah, basically here, it's kind of a story of like two different businesses. So on the one hand, the networking business, which is 60% of the revenue, is booming. You know, if we go to it, it's up 39% year over year. But the other two businesses that they have, like the materials business is down 5% and the lasers is down 1%. So the networking was up 45, the other were down. So when we combine all those businesses, the revenue was only, well, this is still pretty good. The revenue was up 16% year over year. So, and good news is they have some weird adjustments to their GAAP net income. So you really look at the operating profit, they're actually profitable every quarter. Like technically the business is profitable every quarter. So that's great news. So you're really buying this one for the networking business growth. And I think that this growing so much has really beat expectations. So you're probably going to watch that number. That's the best part of the business. Time to go all cash. Yo, what up, Mark? What up, Eunice said CTM. I know it's a small company. Okay, let's see. So this is Castellum or something. So very small. Yeah, you're right. They're worth $100 million. So that's a pretty small market cap. Do they have financials though? So they had revenue of 14 mil. Actually, that's not bad. Up 21% year over year. That might be record sales. They're barely losing any money. Like they only lost 300,000. So basically break even. They've been improving the balance sheet tremendously. Liabilities are going down, down, down. Maybe from dilution. Yeah, they have been diluting a little bit, but that's all right. Like as long as they can keep up this revenue growth, as long as they can keep that up, I mean, it could potentially be you're paying $100 million for a company that has no net debt and potentially makes a couple million every quarter in the future. So honestly, I could see the value there. They are diluting a bunch, so there are some risks. They're very small. Doesn't take much to move them. Procter Gamble is trading below its moving averages. Let's check it out. That's a nice dividend company, actually. Ooh, someone said Reddit and Robinhood. I own both of those companies. Yo. Oh, maybe we'll look at them after this. So here's Procter & Gamble. Yeah, this one has been struggling. They own a lot of like popular brands you've heard of, like Old Spice, Gillette. Like it's a staple company. It's going nowhere pretty much. It trades at 23 times net income. You know, that's around historical average, slightly below. The organic growth was actually, what was it? Yeah, so organic growth was 2%. So if we go to their total revenue right here, revenue is up 1.7. This is why I think they're trading at this kind of like fairish like 20 times net income. It's because the sales are kind of low single digit growth, 1.7% year over year. But the best news about this company is the net income they make, like legit $3.5 to $4.5 billion in net income every quarter. They own so many multi-billion-dollar brands, like they're in fabric, home care, baby, feminine, family care products, beauty products, healthcare, grooming. So pretty cool. Half the revenue is international. You get a 2.7% dividend. So honestly, this is a stock you just buy and never sell. My dad owns some shares of that one. So you just like buy and never sell them. So you know what? We'll look at Robinhood stock. Hey, I'm also a Robinhood user, so I've probably given Robinhood stock a lot of fees. But Robinhood stock is one of my best. It actually is my best performing stock ever. I regret every share I've ever sold to them. I'm so mad. But yeah, we're up 800% on Reddit. On Robinhood, we used to own like 50 plus more shares of them. So that's why, I was up by 300%. I decided to sell most of my position, and that was a huge mistake. So here is Robinhood, though. They deserve to be at an all-time high. They're just so innovative and so growthy. Check this out right here. And then we can look at Reddit, too. Should we buy now? I do not think Robinhood is a good buy at $126 a share. It is expensive, but they also deserve a high premium. We can see their net cumulative funded accounts. Same time last year, it was 24.2. Now it's 26.5. That's like a 5 to 6% year over year increase. But the best part about Robinhood is how growthy they are. Like revenue's up 45% after growing 40, after growing 52. And look at this. This quarter, they made 990 million of revenue. Out of that 990 mil of revenue, 390 million of it was after-tax net income for them. So, yeah. They have like these brokerages have incredible margins, like 40% net margins. Another brokerage is like Interactive Brokers. Another one is FUTU. They have incredible margins. Honestly, I think Futu is kind of like an underrated, like it's a smaller version of Robinhood, and they trade at 19 times net income, and they're actually more growthy than Robinhood. And they also pay a yearly special dividend, which is kind of cool. So yeah, that's Moomoo stock. I sold Hood in the 40s, regrets. Yo, me too. Actually, here, I'll show you this real quick. Check this. I actually probably sold it lower than that. So here's my Robinhood position right here. Yeah, look at that. I sold 50 shares at $36. You know, at $36 a share, it's $125 today. Here's the thing. I was buying Robinhood like at their IPO. Here's where they IPO'd. And I was buying, oh yeah, it shows it. So yeah, look, here's where I bought my Robinhood shares. And then I slowly bought more as time went on. But anyway, yeah, I've basically just been diamond handing Robinhood for many, many years. And as soon as I saw I was up like 3-4x on them, I had to sell. All right, so what about the QQQ? Yo, if anyone likes the QQQ ETF, in my opinion, never buy that one if you plan to just buy and hold it forever. Because I think you should buy QQQM. It's the exact same ETF, the exact same NASDAQ 100 strategy, but with a 0.15% lower expense ratio. So for every $1,000 you put in this ETF, you're saving $15 a year in expense ratio fees versus the normal QQQ. It's also run by Invesco. And literally Invesco owns QQQ and QQQM, but the reason they don't market QQQM is because they don't want, they don't make as much money. I promise you, it's the exact same ETF. So anyway, just check that one out if you're curious. QQQM, if you plan to buy and hold it forever. So, what about SCHD? Yeah, this is another great dividend growth ETF in my opinion. Well, it's actually more like it doesn't grow their dividend too much, but check this out right here. Yeah, you get a 3.75% dividend yield. Actually, they do raise their dividend. Actually, the reason the dividend went up so much is because they sold their Broadcom to buy a bunch of dividend stocks. I kid you not, their rules have hurt them tremendously, but their largest holding right here at the top used to be Broadcom, AVGO, but they sold it like years ago they would have been up like triple since anyway, but I love their top holdings. First off, I love AbbVie. They better keep AbbVie as their top holding because this is a great dividend growth stock. So they better keep this one in. But yeah, then they have some of the other higher yielding names like Chevron, Home Depot, Altria, Pepsi, Cisco. I love Cisco. But yeah, some of the higher yielding names are, but like if you look at Verizon, for example, here's why you don't always want to choose a dividend stock if you're a young investor. Like here's Verizon, for example. If we go to their dividend, yeah, this is a really nice yield and it's very safe and sustainable in my opinion. Verizon, yes, has a safe 6.3% dividend. That's a 6.3% of your money back every year. But here's the one trade-off. Especially if you're a young investor, you probably should stay away from Verizon because look at this. They're actually the exact same stock prices they were back in 1997. So you really underperformed the market in that time. It's literally the exact same price from 25 years ago. So be a bit careful. Let's keep going though. Hey, what up, Nemo? John said, thoughts on, wait, hold on. Let me look at this one. What is PTLO? Is that Portillo's? Okay, yeah, this is some pizza restaurant or something. The restaurants have been struggling. I would stay away from all the restaurants right now, except if it's McDonald's. I think Chipotle might even go a little bit lower, but hey, look at this from a technical point of view. This app is saying that there is a bullish continuation wedge in the rise probabilities at 95% chance. But here's the one bad news. And here's why I can understand why the stock is kind of not doing too well. If we go to the net income, the revenue, it's up 3 points. It's single digit, barely beats inflation. The revenue's up 3.6. And the net income, the profits they make are just barely, at least they're profitable. That's the good news. But they're making, just like 8 to 10 million in net income a quarter. I don't know about this one. I'd just be careful with that name. I'd go with the safer McDonald's, or I'd maybe even go with the Chipotle over that one, just because they're so tiny. But yeah, if we look at a lot of the restaurant stocks like Wendy's, look at how bad Wendy's is doing. Yo, Wendy's is the exact same stock prices they were back in 2007. We look at like a Jack in the Box, a ticker symbol Jack, RIP Jack in the Box, this stock is the same price that it was back in 2005. So a lot of these restaurants I feel bad for. Jack in the Box also owns Del Taco. Has anyone ever been to a Del Taco? They're not doing too well either. How's that? Actually, let's check. Yeah, look at that decline. Unfortunately, so the restaurants are struggling. I'd pick McDonald's. What happens is, yo, what up, Chase? Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. I'm on a brokerage right here. It's where you buy stocks on. So yeah, link tree in bio, first link there. Yeah, no problem, Doman. Hopefully that was helpful though. So wait, I wanted to look at, where was it? Taiwan Semiconductor. Yeah, let's look at Taiwan Semi. And then we can, Drift said Apple. Yo, Drift, remind me to look at Apple. I do want to look at them. I see Nintendo stock. How much toast do you have? I think I have like 15 shares. So here's Taiwan Semi. They're at an all-time high today. So this is one that I've been telling people, just buy, never sell this one. They have great financials, like they really do. And even though they're at all-time highs today, the valuation isn't like crazy. Like they're trading at 30 times net income. Like that's not ridiculous in my opinion. Like even though they're at all-time highs, it can maybe go a little higher. They're the kind of company that deserves a high premium. Here's why. If you didn't know, NVIDIA just designs the chips. NVIDIA designs their chips. Taiwan Semiconductor actually manufactures and makes the chips for NVIDIA. They have the largest market share for these nanometer wafer chips. Like they make these 3 to 5 nanometer wafer chips, 67% market share. But you can forget all that, forget all those words, judge them off their financials. And when you do that, like this company is like a gem. We can see the revenue is up 55% year over year. So revenue is up 55 and net income is up by 79. That means they're expanding margins. Net margin went from 36 to 42%. And that's insane when you're doing 30 billion of revenue a quarter. So yeah, they're literally doing over 10 billion of after-tax net income a quarter. That's insane. Fortress of a balance sheet. And it's kind of like NVIDIA with the higher yield. You get a 1% plus yield. They raise the dividend every year, safe payout ratio. Taiwan Semi is an absolute beast. I agree. And another stock, you know what? Since this one's so popular, let's do it. I'll be quick about this one, but this is another company you just buy and never sell. Just don't trade it. Just hold it. And check this out. You do get a small yield, 0.4% yield, but check this out. We can see their smartphone market share right here. We get some cool data. Apple has a 17% smartphone market share. iPhone is literally half their sales. So iPhone is crazy, but that's their hardware. Most of the revenue and profits Apple makes actually comes from their services business. So if you go spend $100 in the App Store, like you go spend $100 on Clash of Clans gems, $30 of that goes back to Apple as a royalty. These developers have to pay 30% of the money they make to Apple as legit a royalty just for being on the Apple App Store. So the services revenue is their highest margin business. They're also, they sell Macs, wearables like the AirPods, the watches, whatever, and then iPad. But here's why Apple is also a bit affected by tariffs. Like I always thought Apple, more of their revenue was from the US, but only 36% of Apple's revenue comes from the US. 25% of their entire business is just Europe. 17% is just China. So everyone around the world loves Apple products. A lot of people are locked in the Apple ecosystem. I'm on an Apple iPhone right now, and check this out. They print money. It's pretty ridiculous. They're making like 20 to 30 billion of after-tax net income a quarter. And what is Apple doing with that money? 20, 30 billion a quarter. Well, since they're so big, regulators wouldn't allow Apple to like buy a company. They legit deploy it all in buybacks. That's the best part about Apple. Did you know? Like, this isn't like said enough, but Apple literally spends 20 to 25 billion dollars of their after-tax net income every quarter solely buying back their own stock. Their dividend only cost $4 billion. So they have a significant amount of room. Like they legit could afford to 5x their dividend. They just choose not to, which is the smart thing. Like that's why Apple stock doesn't go down. They just buy back their own shares like crazy. And here's also another way you can tell if a company does share buybacks. If you go to the net income right here, the net income is up by 9% year over year. So net income is up by 9, but net income per share is up by 12 since the share part of the ratio went down. That's what EPS is. Pretty cool. I love Apple. Oh, wow. We just hit 100% gain on Amphenol for the first time ever. No way. The new all-time high. Dude, that's unbelievable. This is the copper provider for NVIDIA. That's insane. I got Apple. Yo, King, that's awesome, dude. Yeah, that's a perfect never. So I wouldn't sell Apple at this price either. I'd just keep them forever. So what up, Joel? And Tutrick said NTDOY. So yeah, did y'all know Nintendo was publicly traded? Now they're not on a US stock exchange, so they are an ADR. You see at the top it says ADR, so that means you have to pay a yearly fee because they're on the Japanese exchange. So you have to just, and it's a little bit of complication, but it's not that big of a deal. Nintendo just released their like Switch 2. Let's go look at their metrics right here. So product sales, it actually looks like it's falling. That's the normal Switch. I guess the Switch 2 annual playing users is going up though. They got 128 million annual playing users. Yeah, this Nintendo, this net income on Nintendo is very strong. 600 million to $1 billion. This is actually the only way to get exposure to Pokemon, because Pokemon is not publicly traded. There's no way to get exposure to Pokemon, but Nintendo owns 10% of Pokemon. So you can get exposure to Pokemon card stock via Nintendo, via their ADR. So there you go. I love Nintendo, actually. Let's see. What up, Steven? He said CRMD. Yeah, this is one of my newer picks. Again, when I cover this stock, I can't stress this enough. You can't make this a meaningful size position. Like, it's such a risky company. But let me tell you why I decided to buy shares of this company. Oh, there it is right here. So I have 19 shares of CRMD. I actually bought a share of them yesterday. Or I'll show you that if you want. Yeah, this is my history, September 22nd. Yeah, yesterday. We bought another share at $11.30. Again, as much as I love this company and I think it's going to 3X, it's only a $200 position for me, but let me tell you why I think this is worth maybe 200 of your dollar. Hey, wait, can't say that. Not financial advice, but if you like this stock, you cannot make it a meaningful size position. Keep super small, but here's what's so convincing about this stock. If you look in the top right, the market cap, this whole entire company is worth $850 million. So kind of think about that in the back of your head. The whole company is worth $850 million, and this is legitimately a debt-free stock, no debt at all, no debt on the books, and $190 million of cash. So first off, that's a huge safety net, takes a lot of risk off the table, gives them tremendous freedom. Literally 25% of the entire valuation, the entire market cap is just their cash on hand. Look at that fortress balance sheet. And also, they're the most justifiable buy they've ever been, because they used to be revenue-less. Their product wasn't FDA approved. It just got FDA approved a year ago, and so far the sales are doing insanely well. And they did $39 million in revenue. This is the best part. They did $39 million in revenue, and $19 million of it was net income. That's the thing. So it's an $850 million market cap. $190 million of it is cash, no debt, and they're going to be making $15 to $20 million in net income a quarter. Actually more according to the analysts. Like, if we go to the revenue expectations, it was $39 million in revenue this quarter, a record. It's expected to be $100 million next quarter. We can look at the EPS. EPS is expected to be from 28 to 70. 28 cents of EPS is, remember, 19 million in net income. So that means the net income is going to be like 30 to 40 million. So that's crazy. Again, they're pretty cool. Most of here's some more risk. I will say their patent expires in 2033. For Deaf and Cath, 60% of all their sales come from one customer or from one hospital group. So there are some risks there, but if you want to learn more about them, check out my most recent YouTube video, or my second most recent one. I did an analysis on them. What app is he using? Yeah, hey, it's in the link tree in my bio, the very first link there. If you want to get this app I'm on, it's actually a brokerage I'm on. It's where you buy stocks and stuff. So yeah, if you want to get this app, link tree in bio. It's an affiliate link, full disclosure. So look at NEO. We just looked at NEO a bit ago. I actually don't love them because they just burn through net income, like in a lot of it too. So I'd be careful with that one. Maybe we'll look at them later, because we just looked at them a bit ago. Someone said Toast. You want a Eunice? Yeah, let's look at Toast right here. This is a stock I do own, by the way. Full disclosure, if I go down here, we're actually down on my position. We're down 2.7% on my 15 shares of Toast. This is actually a restaurant payment processor point of sales, like, system company, and they've just been really growthy. This is the best part about the company. And they just got net income positive. If we go to the net income right here, they're the most profitable they've ever been. 80 million net income this quarter, making net income every quarter. And if we go to the revenue right here, it just hits a record every year, every quarter. It's up 24% after going 26, after going 37, after going 50, after going 100. Like, the growth is insane. And they're finally net income positive every quarter. They're fortifying their balance sheet. The liability ratio is going down. The cash from operations is also at a record. So everything Toast financially is headed in the right direction. But here's one thing I will say. If you're wondering, hey, why is Toast kind of struggling right now? It's because, it's because the whole restaurant industry is. Like if we look at Chipotle stock, Chipotle's been on a nasty downtrend. Your basic Wendy's stock, you look at Wendy's, they're at an all-time low. So a lot of the restaurants, the underlying industry, the industry they service isn't doing too well. That's my conspiracy for why Toast is struggling right now. But financially, the revenue looks great right now. My first stock was TSSI. What was your first? My first stock ever was Phillips 66, the like gas company, the oil and gas stock. Someone said, where do you think SoFi is going? Someone said SoFi is going up and to the right. Yo, I think in the long run, SoFi is just going to continue to win. What was that last one with zero debt? Yo, Ryan, that was CRMD CorMedix. By the way, if you miss anything, I'm streaming on YouTube. You can replay it. But here's SoFi. This stock deserves to be at an all-time high, in my opinion. I certainly wouldn't buy them at $25 plus a share, but here's why they deserve a high premium, and I think they're just going to continue to win is because they're so growthy. If we go to their this is a fintech. They have their own banking charter. They got it through a loophole. And if we look at this, it's so growthy. It's up 105. It's doubled after growing 80, after growing 222. Like, to pull this off is so impressive. Like the revenue was just $2 million a quarter, and now it's all the way to $360 million. And that's just the financial services business. If we go to their main lending revenue, that's up 30%, also to a new record. So they're beating on every expectation. If we go to the orange line, this is the analyst expectations from S&P Global. And it blends them together. The orange line is what the analysts expect, and they're beating on revenue, they're beating on net income, they're beating on EBIT expectations. Like people are really taking SoFi serious. If we look at the revenue, it's up 42%. They did $850 million in revenue. Out of this $850 million in revenue, $97 million of it was after-tax net income. They're expanding margins. So I really love SoFi. That's a stock I regret every share I've ever sold of, kind of like Robinhood. When I was originally up like my first 100% on them, I sold most of my position. Dumbest thing I ever did, but I still got 24 shares left, and we're up an insane 390% on them. So yeah, what's actually, I think Reddit's struggling on the, oops. Here's my all-time performance in the top left. We're only up 15% all-time in here, so we've definitely underperformed, and we're down 1.6% of the day. Yeah, Reddit has really led to a lot of our losses today. So let's get back here. Yeah, I do like SoFi. I might be biased on them, though, because I do own them. Oh, yeah, I saw Sezzle a few times. I forgot to get to this one, so let's do it. This is a fintech right here. I actually really like this name. Oh, Ryan said Shopify. We got to look at Shopify, too. So here's Sezzle. This is one I actually would put on your watch. That's not financial advice, but I'd put this one on your watch list. They're really growthy. They're the kind of stock that I'd happily own if I didn't own their legit biggest competitor that moves exactly with them. Ticker symbol Dave. If I didn't own Dave, I'd probably own the stock. So check out the growth here. This is the best part. Like revenue's up 76 after going 60. Like if you notice, a lot of the companies I like are really growthy, and not just growthy, but profitable. Like look at this. Out of this 98 million of revenue, 27 million of it was after tax net income. They actually were the most profitable they ever been. Like they had a one-time adjustment the same time last year. It says they made 29 million. It was actually, they only made 16 million. So the actual real profits were up 116% year over year. So they're expanding margins. Like the margins are ridiculous. They have 30, again, one-time adjustment, ignore that 50% margin, but these are all real. 25 to 35% margins is insane. Look at the gross margin expansion. Like you can't make that up. 58 to 73. This is a good business. And I look at the deleverage, like the liabilities used to be 76% of the assets. Now it's only 62. Sezzle's pretty cool. Everything there, in my opinion, is headed in the right direction. What platform is this? Yeah, hey, again, if you want to get this app for, this is a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So why do you use this app instead of others? Well, again, I have the other apps. I have Webull, I have Robinhood, but this one is just the most useful. Like for doing analysis on a company, like you don't, if I go to Robinhood right here, like there's no tools to really analyze a stock. Like I click on Innodata right here. Like this is really all you get. Like you can see the PE doesn't give you anything else besides that. So honestly, this is the most lowest fee, most useful brokerage in my opinion, to buy stocks on it. And again, if you want to get it with my affiliate link, it's in the link tree in my bio, the very first link there. You can just type it into Google. It's just a broker called Moomoo. But yeah, link tree in bio, first link if you want to use my affiliate link. So anyway, here's the cool stock right here. Someone said Amazon. Yo, B-Mills. Yeah, Amazon is actually being investigated by the FTC today, I believe. That should be news. New 100,000 H-1B visa fee impacts Amazon's tech workforce, with Amazon leading 10,000 visa receipts. Well, hey, that might be another reason why they're falling. So anyway, let's Oh, yeah. And then the third piece of news there, Amazon faces FTC trial over Prime subscription practices. Apparently, they were like misleading customers with their Prime subscription. I have no clue. But anyway, I think this is an absolute buy the dip opportunity. I wouldn't full port it right here. I'd nibble here and then I'd wait maybe to buy more longer, but you don't even have to wait if you wanted to. Like Amazon's the kind of stock you just buy and never sell. Like even if you bought all in today, as long as you have the intention to just never sell, like you're probably doing the right thing here. But check this out. I love Amazon for their margin expansion. Like they're kind of facing the law of large numbers. It's hard to grow this, like 167 billion of revenue this quarter, but it grew 13% year over year. So revenue's up 13, but the net income is up by 35. That means they're expanding margins. It's so impressive. This used to be a tough business. Amazon had negative margins, low single digit margins. Now it's double digit margins. So Amazon's really impressive. And really, their most profitable business is actually Amazon's AWS, Amazon Web Services business. They're actually the number one cloud service provider. So a lot of people know Amazon for, Twitch and their Amazon website, but their actual most valuable business is their AWS, Amazon Web Services cloud business. And it's the highest margin. It's over 100 billion of annual revenue for them. And it just hits a record every quarter, super growthy. So Amazon's a beast. I do own them. I might be biased. I got 13 shares in them. But yeah, they're down on the day. I think the valuation might look pretty decent. Hey, what up, V? How's it going, man? And someone said, ooh, you know what? John said Reddit, Spotify. Let's do Reddit right here. So yeah, we're down. Let me show you this right here. Full disclosure, look at this. We are down 7% on the day from Reddit. Lost me $73. Hit the like button on the stream for me. Your thoughts on Rich Tech Robotics? Yeah, I don't like that company. Ishwar, we probably won't cover them. But yeah, check this out. Here's what I love about GameStop. Like I'd rather own Reddit than Rich Tech Robotics. So anyway, here they're down 7% on the day. This is probably that's normal. They're at a premium right now, but here's why they deserve a high premium. Like they've really beat all expectations. Like again, orange lines what the analysts expect. Huge beat on revenue, huge double beat on net income, huge beat on EBITDA. Like this most recent quarter, like the literal quarter they just reported was like absolute gangbuster, incredible earnings. Like I didn't believe it. Their ARPU, their average revenue, it's either annual revenue per user, average revenue per user, whatever it is. The money they're making per user grew 48% year over year. No analyst expected that. The stock rocketed. The shorts got squeezed. And look how growthy they are. Like, if we judge this company off their financials and ignore the name Reddit, like it's so impressive. It's a debt-free company, literally no debt at all, $2 billion plus of cash, super growthy, like the revenue's up 77 after going 53, net income positive, making net income every quarter. The FCF, which stands for free cash flow, is insane. It's up 4x year over year. Like it's just incredible. So yeah. Hey, what up, Shrek? Hey, thanks for the roses there. He said, is there a free version of this app? Yeah, hey, this app is free. So there's no like monthly fees or anything. So yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. There are certain features though where you have to like deposit $100, but for everything I basically just have been doing the past couple, like the only thing you won't be able to see like the unless you deposit $100, you won't be able to see this stuff like the portfolio tracker. So yeah, you can see like the super investors portfolio, like Nancy Pelosi. These are super investors. They all have to make all their trades public by SEC law, so you can see their exact portfolios, exact same weightings. Like she owns Nvidia, Netflix, CrowdStrike, and you can also like batch trade, follow them into their stuff. But for everything I've been doing, the financial tools are all free. Yeah. Anyway, let's keep going here. Let's see. Yeah, I heard Reddit is one of like last real places on the internet. Okay. Oh, yeah, we got to go to Shopify. I forgot to go to Shopify. My apologies. You know who actually owns Shopify? That's actually Cathie Wood and her ARKK ETF. Honestly, Cathie Wood has lost a lot of respect because of how bad the ARKK ETFs has done versus the S&P. But check this out. 5% of her portfolio is in SHOP Shopify. I used to have a Shopify store. They just print money. Every time you make a sale, like they legit take 0.25% of every sale as like a royalty. But the best part about Shopify, honestly, is how growthy the business is. Like, this is insane. The revenue just hits a record every year. So, these growth rates are nuts, up 25 after going 26. And not just revenue that's growing, but also profits. They're making a couple $100 million of free cash flow quarter. They're net income positive every quarter as well. If it load here. Uh-oh. Well, hey, by the way, if you wanted to follow button, we go live every day. We just look at stocks and stuff. I don't sell anything. Yeah, watch out for people impersonating me. I'll never follow you, DM you. I don't sell nothing. I have no course, book, private, nothing. So anyway, yeah, great balance sheet, no debt on this company. Revenue's up 31, and they're making a couple hundred mil a quarter. So Shopify's one I would love to just buy and never sell. But the valuation looks a little tough right here. Hey, what up, Seuss? Good to see you, man. He said hello. I'm assuming that's not a ticker symbol. Let me know. I think you're saying hello, either that or you're talking about that stock right there. Let me know which one you're talking about, Seuss. Good to see you, man. And Adrian, what up, dude? He said hood. Yo, we just looked at Robinhood 1 minute ago, Adrian. So give me a minute and we'll come back to them. Hey, Togas, thanks so much. He said, I love the streams. I really appreciate you, man. Thanks for showing up to the YouTube stream. Does America have any tax-free savings opportunities like you do in the UK? So yeah, in America, we have something called the Roth IRA, which is pretty cool. There's a traditional IRA and a Roth IRA. I think the Roth IRA is the better pick if you're looking for one. But yeah, it's basically a tax-free retirement account. You can't withdraw the money till you're 55. But let's say, like on Innodata right here, I doubled my money on this stock. I'm up 123%. If I sell it right now, all the gains are completely tax-free. Of course, I can't withdraw the money till I'm 55. But what you can do, if you're a first-time house buyer, you've never bought a house before, you can actually use, I'm pretty sure, like $50,000 of your Roth IRA as a first-time down payment if you're a first-time house buyer. So you kind of can withdraw it. Or if you have a medical emergency or something, you're able to withdraw it tax-free. You're actually able to withdraw it at any time, but you pay a penalty. So I also have my main tax book out here. This is my main tax book. I'm trying to build up more to my Roth IRA. Actually, the Roth IRA is so OP, so good that they only limit you to deposit $7,000 a year. You're not allowed to deposit more than $7,000 a year. So kind of cool. Okay, let's get back over here. Let's. What was your Shopify store? Yeah, you don't want to know. It was actually my Shopify store. I had a Rust merch store. I used to sell Rust merch from my Rust YouTube channel. CRMD looks good. Thanks for that one. Oh, hey, I'm glad you liked that one. Yeah, I'd be super. If you do like that one and decide to buy it, you cannot make it a meaningful size position. So here's TIGR. What up? Elo said, can you look at TIGR? Yeah, this is Up FinTech. This is actually one I really like. They're kind of like a mini Sezzle. So I actually think they might actually be worth looking into right now at this price. And here's why. Again, they're very small, so do beware. I wouldn't make it a huge position. Oh my gosh. Oh, I have to go grab my drink. It's in the freezer. Okay. Anyway, this is a $1.77 billion company. And here's what I love about this stock. They really make real profits. This is insane. Like revenue's up 58% after going 32%. And out of that revenue, out of that 138 mil of revenue, 41 million of it was after tax net income. So yeah. What was your favorite Rust monument? Yo, I loved Airfield Dome. Oh, I love them all. Yeah, margins are great here. So 30% net margins. That's ridiculous if they can continue this. Are the analysts expecting that? So yeah, look at that. Look at how they're beating on analyst expectations. Like this is so good. I actually really like TIGR. They're on my watch list too. So TIGR, I think that one's pretty cool. You play Rust? I got 5K hours. Yo, I also have nearly exactly 5K hours. Yo, I used to be a Rust YouTuber. Will that app auto follow an account buy and sells? No, it doesn't. I don't think, Rate King, unless it's like the super investor stuff, and I think it needs your approval. So I don't think. Kinda. Rate King, look at NANC. What app is this? Yeah, hey Coral. Yeah, if you want to get this app I'm on, again, this is where you buy stocks on. It's called a brokerage. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. So I think this is the Nancy Pelosi ETF. I think. Man, this thing, okay, Unusual Whales Submersive ETF. So this ETF is nearly at an all-time high. An ETF is just a basket of stocks, and its largest holding is NVIDIA. So if you put $100 in this ETF, $10 goes to NVIDIA, $770 goes to... Sorry. I need water. Okay, so yeah, it's kind of similar to the S&P 500 until you get to some of these like smaller holdings, like 3% in American Express. I like that. 3% Salesforce, 3% Meta, then PM. So it's a pretty interesting ETF. They're at all-time highs. I actually like their core holdings. Do you like NVTS or currently overvalued? I actually do not like NVTS at all. I think it's not great. We also get ISA, which allows us reap tax-free interest for 20K. Oh, that's pretty cool, Dean. It's pretty cool. So thoughts on Coinbase's financials. Why is NVIDIA down? Actually, let's look at NVIDIA. We haven't looked at them at all today. We haven't looked at really any semi stocks besides Taiwan Semi. So yeah, let's pull up NVIDIA. Yesterday, they had an insane investment. They invested literally $100 billion into OpenAI, just for OpenAI to buy NVIDIA chips with 70% of that money, which is kind of crazy. A bit circular and a bit bubbly, but honestly, I think the bull market could go on for another year. Like, to be honest with you, NVIDIA, I'll almost put my it will go to $200. Like, this is going to $200 at some point in the next, hopefully, year or two. I'm guessing. I don't own them, but check this out right here. Obviously, we know huge GPU market share, 20% PC GPU market share. Their automotive revenue is a super small part of their business, but it's starting to grow. You know, Lucid uses their automotive software. It's their autonomous driving software, kind of competitor to Tesla. They're also, but mainly this is a data center play. You know, data centers need GPUs, and NVIDIA just supplies their own GPUs to their data centers at the cheapest cost, and they're extremely growthy. You know, the capex of the Mag 7, like Amazon, Google, Meta, spending crazy on AI benefits NVIDIA. So then that's their largest customers that are, recession resistant. So the revenue's up 55%, but out of this 46 billion of revenue, so they did 46 billion of sales. Out of that, 26 billion was after-tax net income. They legit print money. They have insane margins, fortress of a balance sheet. They just took a stake in Intel. They announced a 60 billion buyback program. Honestly, I think that's like a never sell stock. Oh, hey, watch out for those people in chat. Hey, by the way, I don't sell anything. Watch out for those impersonators. I'll never follow you or DM you. I don't sell anything. I have no course book. Yeah. Okay. Well, hey, what up, Sermon? Good to see you, my friend. So, Sprouts Farmers Market. So this is, let's cover this one because I actually just bought this stock and I haven't really covered their actual financials. So, SFM. So actually, I'll show you my buy order for them first. So if I head over here to my Webull account, we go to some of our bigger losers down here. Sprouts Farmers Market is our third biggest loser. But yesterday, 922, I bought 2 more shares of this stock. So I bought 2 shares of Sprouts Farmers Market at $119 a share. And unfortunately, it is going a little lower. But here's what I really like about this one. It's their financials. So really the metric you want to look at for grocery stores is their net margin, because it's historically a low margin business. Kroger legit has 2% margins, but Sprouts Farmers Market has had immense pricing power. Margins are up 20% after going 26. Like, look at this. If we look at the revenue's up 17% and the net income is up by 40. That's insane pricing power. And that's really what I've liked about Sprouts Farmers Market. They also have no net debt. Or actually, I don't think they have any debt at all. So they have $260 million of cash. And I think the total debt was like a couple million. Yeah, total long-term debt is 0. So yeah, they have literally no debt at all. And mainly the main way Sprouts Farmers Market returns money to the shareholder, oh dude, it's just not gonna load, I bet. But it's the share buybacks. Man, dude, all right, sorry, my Wi-Fi's terrible today. If you want a default button, I might have to end the stream here in a little soon, but yeah. Oh, dude, I do need to go get my drink out of the freezer. The drink in the freezer is actually a Celsius. Check this out. So the net income, here's the power of the buybacks. Net income is up by 40, but net income per share is up by 43.6 because there's 3.6% less shares that exist from the previous year ago. So that's insane. If they instead spent the money they spent on buybacks on dividend, you would get a 3.6% dividend yield with that company, but they choose not to. They don't pay any dividends. They do share buybacks, which is pretty cool. So, hey, what up, Odd? What's up, man? What up, Ravi? Good to see you, man. Bob, hey, he said HOND. Let's pull it up. Actually, I'm going to go grab my Celsius out of the freezer before it explodes. Okay. Sorry. Okay. We're back. We got it. Man, I can never get my fingernail under the... Anyone else struggle to open a can? Okay. Actually, this actually isn't a Celsius. It's an Alani. And I can't open this. And Alani, or Celsius, just acquired Alani, which is pretty interesting. There we go. Fresh Celsius or Alani, whatever. Okay. Got it at the Dollar Tree. So here's HOND. I don't know what this is, but it's a $450 million company, and they're at an all-time high. So yeah, congrats if you own this stock. So all-time high today. So whenever you see like these acquisition type names, it's basically just a holding company, and they basically just bought an asset. I do wonder what, yeah, it's a shell company. I do wonder what asset they just bought. Chances are they bought a bunch of Bitcoin or Ethereum right now. Like I believe it, but I don't know. There's no financials for me to look at there. So I wish I could give you more thoughts on that company, but congrats if you own that one. All right, let's see. Yeah, we could look at Celsius stock. Okay. Okay. Gotta go have fun. Hey, what up, V? Hey, thanks for showing up to the YouTube stream. Would you take Tiger over Sezzle? Honestly, right now, Plasma, they're both pretty good, Tiger and Sezzle. So nuclear play. All right, what up? Trade Furnace. What did he say? He said, oh, I don't know where the nuclear stock he said was. All right. UEC. So actually, UEC, this is a uranium play, and uranium is what powers nuclear reactors. You know, if you don't know how nuclear reactors work, they basically just split the atoms of uranium to heat up water, and the water turns to steam, and it just turns a steam turbine. So it really just uses uranium to heat up water. And that those huge silos that you see at a nuclear reactor, you see like those huge round silo things, that's just this for the steam to cool off. But anyway, here's UEC Uranium Energy. The uranium sector has been on fire with all the executive orders around nuclear reactor stimulus. And check this out. They actually had real sales this quarter, 49 mil, up from 39 mil the same time last year, 17 million last quarter. They actually bought a uranium mine off Rio Tinto a while back, and that was a great asset for them to own. And if you're looking for like a uranium, like I honestly recommend you pick and choose your uranium plays. I wouldn't really buy the URA uranium ETF. My very favorite uranium play is CCO Cameco. I think that's the best one. And honestly, if you're looking for a nuclear play, I think nuclear is in the hotness right now. The number one nuclear play out there is CEG, Constellation Energy. They had a great day yesterday, but now it's kind of selling off a little bit of the gains. But yeah, Constellation Energy, they own like legit 50% of the U.S. nuclear reactor fleet, largest pure play. Okay. First time on your live, what's your opinion on Grab? Hey, what up, dude? So yeah, actually, let's cover Grab again. We haven't looked at them in a while, and I saw some people asking about this one earlier. Is Opendoor worth investing in? I think it's not. Opendoor looks like a trading vehicle right now. It's so momentum-y. So I wouldn't buy shares of Opendoor. If I wanted, I just wouldn't touch that one. If I was looking for a stock to just buy and hold for the long run, I'd trade that one because it's really volatile. But and I don't trade. But I don't really trade. I swing trade. I don't really like day trade. But here's Grab Holdings. This is a great company. If you're wondering what does this company do, well, they literally do exactly what Uber does. Like exactly what Uber does. And they have a little bit of like financial services as well. How's that business doing? Actually pretty good. But they do exactly what Uber does, but in all these other countries. Like notice US, Canada, UK isn't on here. And that's Uber's main market. They're in Malaysia, Indonesia, Singapore, Philippines. And here's the coolest part. They're actually now backed by Uber. Uber decided to buy 13% of all the shares. So this company kind of backed by Uber. Toyota Motor owns 5.5% of all the shares. So it's kind of cool to see Uber take a huge stake in this company. They're also profitable, making net income every quarter. Really growthy. Revenue's up 23 after growing 17. Free cash flow is really good as well. So actually, I really like Grab. Okay, can we look at Okta? Yo, our like education thing we use at our college is powered by Okta. So this is like a software name. They kind of just went profitable. Honestly, the stock looks exactly like a PayPal, a DocuSign, and like a Peloton or a Roku, where they did really good in 2022 and are just down like 80% since. So here's the thing, why I actually think this one might be worth looking into. I don't know if this one will really outperform the market in the long run, but the financials actually look pretty good. Like revenue's up 13 after going 16, after going 23. But look at this net income right here. If we look in the past couple quarters, they're net income positive now. They're making net income every single quarter. It's hitting a new record every quarter as well. Because if we zoom out on this company, it used to be a tough buy. You know, losing a couple $100 million a quarter, but now they're finally making net income every quarter. Good balance sheet, deleveraging. So honestly, I like Okta. But yeah, the stock kind of just looks like a DocuSign where it looks kind of similar where in 2021, 22 it peaked and then it kind of just hasn't recovered since. Amazon with the lawsuit. Yeah, Amazon has the FTC investigation for the Prime membership. How about gold? What up, Deuce? He said gold. So the actual commodity, the way to get exposure to gold through a ticker symbol is just IAU. It's literally the digital commodity of gold in an ETF form. So it's arguably better than buying physical gold. If you go buy physical gold, especially in smaller quantities, you're really getting hurt there. Like it's almost not smart to do that because you're paying a couple percent spot fee when you buy it, and you're paying a couple percent spot fee when you sell it, especially in smaller quantities. But anyway, the best way to get exposure to gold potentially is ticker symbol or any of the gold ETFs. It doesn't have to be this is the BlackRock gold ETF. It does exactly what the commodity of gold is. Gold's at an all-time high. The other one is GLD. That's the Spider gold ETF. They look exactly the same because they both just follow what gold does. Pretty cool. And okay. Crispy said, what are you using to look at this? Yeah, hey, I'm on a brokerage right here. It's where you buy stocks. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yo, Zone 2 All. Thanks for the rose there, my friend. I hope you're having a great day. Good to see you. Any good energy stocks to buy for the AI data center? Yeah, best energy stock in my opinion, and I kind of just said this one, but CEG, Constellation Energy. Not financial advice, of course. None of this is. Oh, Zone 2 All, they said Kenvue. So yeah, this is the company that owns Tylenol. It was split off from Johnson & Johnson. And yeah, they're pretty close to an all-time low. But they just basically went public. They split off from Johnson & Johnson. But yeah, they want to put on the Tylenol label that pregnant women shouldn't take this. But again, that's actually, I did the math earlier. It's 10% of their entire business, almost exactly. So 10% of this entire company is just Tylenol. So definitely, I can see why the stock moved, but it's not the end of the world. They have some other, they own Neutrogena. That's one of their, skin and health beauty products. They own Neutrogena. Actually, all the businesses are declining. That's the one thing I'm a bit scared of. And after this news, the revenue decline might be worse, brand reputation lawsuits or whatever. I don't know, but the revenue's down 4%. The revenue, it just isn't growing. And if we go to the net income, they could barely afford the dividends this quarter. So if we look, they made $420 million in net income this quarter. They made $320 million the previous quarter, but they made $420 million this quarter. And the dividend cost exactly $393 million a quarter. So they could just barely afford the dividend. They had barely any leftover money. And if we look at the previous quarters before today, they couldn't afford it. $322 million, couldn't afford it. $300 million. So that's why the dividend is a bit at risk. The sales aren't increasing. They have a lot of debt too. I would just be careful with that name. So yeah, that's exposure to Tylenol and Neutrogena stock. Okay. Hey, what up? Chad Dexter. He said GLW. That's Corning. Yeah, this is one of the infrastructure plays right now. You look at Amphenol and some of these other names. They're going crazy. They're at a new all-time high today. So congrats if you own this name. If we go to their optical communications business right here, it's up 40% year over year. So this is basically the main growth driver for them going into the future. And look at it, they gave good guidance on it. If we look at this quarter expectations, analysts were expecting 3.8. Well, they reported over 4 billion in revenue. So they had a nice beat on revenue, a nice beat on net income, and a nice beat on EBITDA. So it really was a triple beat quarter. So I can see why they gapped up, plus the good guidance for the future. So it's this optical communication businesses, just at Amphenol, it's just booming. It's booming right now. I don't know. I wouldn't buy them at this price. I wouldn't buy them at all-time highs. Trust me, I would love to buy more Amphenol stock, but valuations just look too stretched here. Yo, Danny said, wait, Danny, good to see you, man. It's been a while. He said, Amazon is down. You buying more? I'm actually going to buy more Amazon soon. I'll probably wait. Or should I just buy a share right now? I mean, this is the kind of news that I like to buy. I mean, this is you buy the news event. So yeah, they're facing an FTC trial over Prime subscription practices. Lawsuit claims Amazon misled millions into signing up without consent and complicated cancellation methods. Potential violation of $53,000 a customer. I don't think that, I really don't think that's going to happen. Probably, but it's still a headwind toward the sentiment around the stock. So falling 3%, there's no way it affects 3% of 2.35 trillion. I think it's just Bad day for Amazon. I honestly think they are worth looking into to buy the dip on. I love Amazon and I do own them, and I will buy more of them if they go lower. Especially, dude, if Amazon goes under 200 again, I legit might like double my position in them. Hey, what up, Ricardo? How's it going? Yo, by the way, best way to support me if you want to help me out, hit the like button, hit the follow button. We stream every day. Um, Hey, what up, True Man? He said, can we look at BBAI? I am up a lot and may sell. I actually, not financial advice. I'm not telling you what to do or anything, but I honestly think you should take some profits here, if not sell out completely. Or, well, let's see here. Big Bear AI plus 15% after announcing its AI tech will be used in Unitas 2025 marine operations. Defense contract stake add momentum. So look at that. Looks like they're getting some new contracts or something with Big Bear AI announces commercial presence with Nashville Airport AI system. Seems pretty interesting, but for right now, that's what the momentum is so good on this stock. They're really, you look in the future here, because right now the financials aren't great, to be honest with you. Like if you look at the revenue, it's actually declining. It's a high momentum stock, high growth, but the revenue is negative. The revenue is down 19%. That, the lifeblood, the sales of the company is down 19. They lost 220 million in net income, which is around 8% of the entire market cap just this quarter. So but this new announcement of new contracts might be the answer to bring back growth to the company. I'd still be really careful with that stock. I'd probably take a little bit of profits on them and keep a little, but again, not financial advice. Okay, can we look at what up, Zscaler? Hey, this is a cybersecurity stock. I don't have a cloud play. They're in the S&P 500. I actually really like this company. So the valuation might be a little bit high though, because they just now got, or they're still, are they still losing net income? Because, okay, so yeah, they are still net income negative. So the PE is infinite. So they aren't profitable yet. But the main thing I like about them is how growthy they are. Look at this, or this is in fiscal year, but still same. Each one of these is 4 months or 4 quarters. But look at how every year the revenue this is the total sales. It just hits a record every year, every quarter. Pretty sure a good chunk of the S&P 500 are customers. They have I forget what it was, but it was a high number of customers that pay over 100,000 a year. But yeah, looks like we're waiting for them to really get net income positive. But in the meantime, they're just super growthy. And they just got added to the S&P 500, I believe. What stocks are you considering to buy next? Well, actually, Amazon I'm considering buying more of, but a share I bought yesterday I actually bought a share of Sprouts Farm, or 2 shares of Sprouts Farmers Market yesterday, just to build up my position a little more. I actually sold some T-Mobile stock to do that. I didn't deposit new money. I sold some T-Mobile to do that, full disclosure. And I love T-Mobile. I didn't feel great about selling T-Mobile because I love T-Mobile stock. So can we look at Nike? So I used to own Nike and I know a lot about them, but unfortunately I think it's a tough buy. I think apparel names just aren't going to outperform in the long run. Like all the apparel stocks, just don't keep up with the S&P 500. Especially in this environment, it's really tough. But let me show you the one. I'll just show you the numbers and then you can draw your own conclusion. Again, this is probably bottomed. Hopefully it doesn't get any worse than this. But look, the revenue is down 12% year over year. So that's not great. The revenue is down 12 and the net income, the profits are down by 85. And this wasn't some one-time adjustment. That was real. Margins collapsed. If we go to their net margin, it was only a 1.9% net margin. And that was in line with basically what the analysts expected. Yeah. So, and that's the tough part. See, yeah, they still made net income, but look at this. They made $211 million in net income this quarter. But here's the bad news. The dividend cost, because they have to pay a dividend, the dividend cost $590 million in net income a quarter. So they actually couldn't afford the dividend this quarter. So that's the one concerning thing. We kind of want to see the growth come back to Nike. And I just don't think that'll be a stock that outperform in the long run, the S&P 500. They just can't double their revenue. I'll just really quickly, let me pull this up one more time. Here's their annual sales. They're doing, they did 25 billion in 2019 and it's 30 billion today. They can't double this to 60 billion. It's just, I don't know, these apparel companies, low margin, super exposed to consumer trends. And I'd be careful with that one. I'd have it as a small position though. The Visa, oh, Visa stock. Yo, actually, you know who owns Visa? Nancy Pelosi. I believe Buffett might also own some Visa. But let's check this out right here. Yes, sir. So, okay, come on, Pelosi. Let's load the portfolio. All right, here we go. So, yeah, 2.2% of her portfolio is in Visa stock. And this is a company that I recommend you just buy and never sell. They're so quality. Like, they're a very quality company. And you get a nice growing dividend. Like in 2020, the dividend was $1.20. Now it's $2. Like, if you were relying on this for income, your income is up tremendously. Like, the yield is only 0.68, but over time, like, they'll double it went from $1.20 and just to your yield on cost grows every year. And here's the best part about this company: the after-tax net income, those small little credit card transaction fees that we pay or that are slowly bankrupting us, are making Visa a lot of money. They have a shared oligopoly with MasterCard, so they're making legit over $5 billion in net income a quarter. And what is Visa doing with $5 billion in net income a quarter? Well, this is another reason why the stock is great. They return it to the shareholder via buybacks and dividends. They spend $4 to $5 billion a quarter on their buybacks. That's why the stock doesn't go down. Again, if we look at the net income's up by 8, but net income per share is up by 12. Wow. So they bought back 4% of the entire company just in the past year and said they could have spent that all on dividends. That would have given you they could have nearly a 5% dividend yield right now. But again, they choose not to. They choose to do share buybacks more. I love it. Okay. Hey, funny dude, thanks for all the roses there, the 4 roses. I really do appreciate that, my friend. Hope you're having a great day. So Fern, he said ROBO ETF. This is ROBO ETF. So yeah, this is a robotics ETF. Basically, that just means a basket of stocks. And if we look at what they own, its largest holding is Celtic. And then Symbiotic. I love Symbiotic, one of the best robotic plays out there. I'm surprised Amazon isn't on here. If I ran this ETF, I'd probably just have Amazon as the largest holding, just as a nice backbone. But anyway, yeah, I wonder what the expense ratio is on there. Actually, let me check for you. Ooh, a 0.95% fee. So again, this hasn't outperformed the S&P 500, so it does less than 8% a year, and 1/8 of your returns are being eaten to an expense ratio. So it is a bit tough. That's kind of the same with these covered call ETFs. You know, is this pre-recorded or something? No, I probably just sound like a robot. But yeah, if you look at the top left, you can see the time. Actually, let me check the portfolio. I haven't done that in a while. We're down, 0.83. Yeah, it's 3:30 right now. If you check your time, hopefully, I'm on the East Coast, but anyway, yeah, look at the market right now. SPY is not doing too well right now, down 0.7%. But Robinhood's green. It's the only thing green on here. Palantir is green. Bonds are green. And Amphenol, dude, a new all-time high on Amphenol. I actually don't believe it. Okay, why'd the market drop hecka today? Yo, I think it was just Jerome Powell talking and just momentum. Like, we did hit an all-time high yesterday. Like, look, the Qs are down on the day. You know, the Qs are down 0.7. But when we zoom out to year-to-date, like, you can't even see the dip anymore, like, because we literally just hit an all-time high. So, yeah, I wouldn't be concerned about it. Now, I would maybe be concerned if we continue this for another couple of days, but what are your thoughts on RGTI or Rich Tech Robotics? Yo, Potato, I actually don't like either of those. They're super tiny, and they're not good buy and hold plays. I think there's fun to swing trade. Bob said, does UNH pay a good dividend? You know who loves dividends is the homie Warren Buffett. And if we go to Warren Buffett's portfolio, again, he's a super investor, has to make all his trades public. If we go to his newest positions this quarter, he actually just bought 5 million shares of UNH himself, which is pretty insane. So if we go to United Healthcare right here, Warren Buffett loves dividend stocks, and United Healthcare has a nice yield. It has a 2.5% dividend. Warren Buffett doesn't, buy a stock normally unless he really does his research. So it's that's why the stock rallied up so much on this day right here. The stock literally gapped up on this day solely on the news of Warren Buffett buying, because if Buffett's doing his due diligence and buys the stock, then maybe there's some value. I would still be careful with this name as we get closer to these next couple quarters. Like, the net income is supposed to fall off a cliff. The EPS is expected to go from $5.90 to $1.70, like a legit 75% decline, or 60% decline. It's a tough. So watch the next 2 quarters really heavily on earnings. But yeah, you get the nice 2.5% dividend in the meantime. One thing I will say, that they actually won't, this quarter right here where they'll do $1.70 of EPS, they actually won't even be able to afford the dividend that quarter with the amount of little net income they'll be making. So hopefully, it looks like the sentiment is really bottomed on that one. Cold said what app? It says, yeah, hey, again, if you want to get this app I'm on, it's a broker. This is where you buy stocks on. It's called a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Hey, what up, Marvelous? How's it going, man? Do you trade Forex? No, I don't really do currency stuff. Nah. I mainly just buy and hold great dividend companies. Like this portfolio specifically, if you look at the top left, it's called my buy and never sell portfolio. Because once I buy a stock in here, I, for the most part, try to legit never sell it. I don't take any profits. Like Comfort Systems, I've been taking a single share of profit on this stock ever. Powell Industries, no profit. Amphenol just hit a new all-time high today, up 100%. Crazy. Ooh, someone said any new positions. I will say, in this one, I didn't feel great about buying this one yesterday, and I'm already down on them. Yeah, we're down 2% on them, but I bought this stock yesterday, PODD. I'm doing more research on them. But I didn't feel great about buying them because, look, if we zoom out, dude, someone's going to call me crazy. Look at this. We zoom out, this stock is pretty much at an all-time high, and we bought shares. But anyway, they seem pretty interesting from my own little analysis. Yeah, here's our all-time. I just like being fully transparent, of course. I sell nothing. But yeah, here are some of our losers. Like Sprouts Farmers Market was one we bought more of yesterday. We bought some more TAP, Sprouts Farmers Market, and I think we bought one share of CPRX yesterday. Yeah, we bought one more share of that company. Oh, well. All right, CORZ. Hey, that's a Bitcoin mining company, and this company might be getting acquired by CoreWeave. So I think this stock might be, let me check the weekly news. Okay, there is no news. So I believe this might be a Bitcoin mining company that transitioned itself. Hold the phone, warns traders on CoreWeave $9 billion acquisition. Okay, anyway, yeah, this is kind of like a crypto proxy, I believe. Yeah, if we go to the revenues, 80% of it comes from their digital asset self-mining business, but then they have the co-location and digital asset hosted mining segment. Anyway, it's like they have more liabilities than assets. Revenues down by 45%. From a fundamental point of view, the stock has been on fire. It's doing great. Because this stock was originally delisted and went bankrupt, and then they got relisted onto the exchange. I don't know. It's really just if the acquisition goes through is where the money's to be made on that stock. I'd be careful, of course. All right. Wait. What? Okay. How to use my flashlight? All right, whatever. All right. How do you feel about the YieldMax? Yeah, I don't love the YieldMax ETFs. They kind of just slow burn your capital. You don't really total return make any money on the YieldMax stuff. So like TSLY, for example, like look at this ETF right here. It's actually probably been doing a little decent the past couple months here. And hey, yo, Dot, dude, thanks for the ice cream cone and the 2 roses there. Yeah, if you got he said ONDS. Yeah, we'll check out ONDS after this. Yeah, look at TSLY, for example. This started out as $40. Now it's $9. A huge decline versus what Tesla has actually done. Like Tesla hasn't fallen that much. It's just because you pay over 1% yearly expense ratios, you get the net AV, you get the NAV erosion and the return of capital, which even faster compounds you're losing returns. Like it's just tough. Okay. Oklo is crazy overvalued. Do you trade leverage? No, I have no margin. I don't do leveraged ETFs either. Yeah. And do you like it? Yeah, I love ETFs. Yeah, QQQM, VOO, the S&P 500. I love all those ETFs. So wait, what was this one? Thanks for the rose there again. ONDS stock. Yeah, let's do it. So ONDS. So this is Ondas Holdings. Wow, look at the momentum. They're up 8% on the day. Today's a kind of a red day, but they're doing great right now. And let's see if we can figure out why. So if we go to the revenue, okay, so yeah, this is like an autonomous software company. Basically, they just finally got revenue. And look at this. So the revenue was $4 million, and now it's expected to be in 2 quarters, $9 million. So that's going to be a huge 2x. So we're really, the revenue went from $900K to $6 million. So they are still losing a bit of money, 10 mil a quarter, but it's this future growth. Again, it's 10 million of sales a quarter. What's the market cap? 2.5 billion. I wouldn't touch this stock here, but it has a lot of future growth, and that's really why the stock is rallying up so much. That momentum makes sense to me, especially with how momentum-y everything else is right now. Like the quantum stocks are going crazy. New here. Hey, what up, man? Thanks for showing up. He said NNE. Is that nanonuclear? So with some of these smaller nuclear names, like they're trying to make these small modular reactors, they're kind of revenueless. They're if you actually want real exposure to nuclear, you go with either a Vistra Energy or a Constellation Energy, in my opinion. This literally, out of all publicly traded stocks out there, this one owns the most nuclear reactors by far, out of any other nuclear stock out there. Out of any other publicly traded stock by like double. It's not even close. So CEG is the number one purest play for nuclear energy. And like that one has real financials. Like if you go to this one right here, like this is still revenueless. It's a startup. If you go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service. So that's one thing I would be careful with. Luckily, they have a fortress of a balance sheet just because they've been taking advantage of the momentum and diluting you. So yeah, they diluted you by 100 mil. That's actually the right thing for them to do. I would, but it's just tough to pay. Like it's all momentum right now, but I just couldn't fundamentally buy these. Like I think SMR just got their first contract. SMR does have a little bit of revenue, but I would rather go with like a Vistra Energy or a CEG. Okay. What up? Him stock. Hey, I haven't seen this one in a while. So yeah, let's do it. This is one of the healthcare plays. Hey, Dot, dude, thanks again for the little gifts there. He sent a Zang Man or whatever. Hey, thanks for that. Appreciate that. So here's Hims and Hers. A lot of people think this is a meme stock, but they actually have some really nice fundamentals. Like if you go to the revenue right here, this is the one thing I like about them. Like it's extremely growthy. Like the sales are up 72 after going 51, after going 83, after going 93. Like the growth is insane on the sales here. And not only the revenue, but also net income. They're making net income every single quarter. They have pretty good margins. But one reason why the stock has gapped down on earnings right here is because they lost their partnership with Novo Nordisk to sell a weight loss prescription. So one reason why a lot of this growth came to their sales was because they sold a weight loss prescription on their website at a much cheaper cost than Eli Lilly's. But now they can no longer sell it on their website, and that's going to hurt their future growth. But they just started releasing new things like testosterone products and stuff on their website. I wonder how, and it should mostly be priced in. I wonder how the growth will happen in the future. It says FDA issues warning letters to Hims and Hers over health, semaglutide marketing, and Super Bowl ad. I wonder what that's about. That sounds interesting to read. Hey, thanks, Eunice. Hey, what up, John? Always a good day when Nathan's streaming. Hey, I appreciate you, John. Thanks for showing up, man. Hope you're having a great day, too. Days when the market is red. Yeah. I try to stream every day. Yeah, by the way, if y'all want it to follow button, we stream every day, sometimes twice a day. And I sell nothing, of course. I don't have a course, book. Watch out for people impersonating me. I'll never follow you, DM you. I have no like private group or no. So anyway, let's see. What stock should we look at now? Oh, BeatDish. What's up, man? He said EQT. What's this one? EQT Corp. So this stock, unfortunately, has not done too well. If we go back to the year 2007, it's the same price that it was back then. So stock's been flat for like 20 years. They trade at 26 times net income, which is pretty fair, but it looks like it's because they're in the oil and gas industry. So they're in production. Let me double check that. Yeah, petroleum, oil and gas. So they probably have a decent yield. Yeah, 1.23% dividend yield. And look at this huge beat the most recent quarter. That's actually what's shocking to me. That's probably why this stock is, at least in the past couple months here, performed better than your average oil and gas stock because of this huge beat. Analysts expected 1.7. They reported 2.5. Huge beat on net income. And they beat on EBITDA slightly. So they had a really good most recent quarter, which is good news. Yeah, that's a crazy sales beat. 168% year-over-year growth. Hopefully they can continue that. What's this one here? Yeah. Ooh. Plug Power and LG. What's LGN? Legion. So let's check out this. Oh, this is an IPO. So honestly, there's nothing I can really tell you about this stock. They're a $3.5 billion company. They just IPO'd, but they do installation and maintenance, engineering and consulting. Since they just IPO'd, we don't get too much revenue data here, but it looks like the sales are up 15%. So good to see double-digit revenue growth. They are still struggling with net income positivity. Balance sheet's all right. Deleveraged from the previous year. That's good news, maybe with the IPO funds. I gotta wait for this company, do some more research, wait for them to release an investor presentation to learn more about the stock. It looks like they're an engineering consulting segment, designs HVAC and other MEP systems for buildings. So seems pretty niche. They design like where you'll put the HVAC. Maybe that's big right now with the data center rigs or the Bitcoin mining rigs in the data centers. Got to be real specific on where you place the HVAC, or you got to be specific on how you design it or something. The mechanical, electricing, and plumbing work in the. Anyway, why is Rivian up? Okay, let's see. Good question here. Hey, oh, we got to look at CDE after this. Yo, thanks. What up, funny? Good to see you. Yeah, thanks again for the roses. So here's Rivian stock. Looks like this one is up 2% on the day. But this company, it might just be a little sympathy rally. It's really been flat for a while, down bad from their IPO. And that's because this company just unfortunately burns a lot of money. So if you look in the top right, they have a really big market cap. They're an $18 billion company, so pretty big market cap. But here's the bad news. We go to the net income down here. They lost they lost 1.1 billion in net income this quarter. 550 mil last quarter, 700 mil, 1.1 billion. Like they're losing a lot of money. At least the trend is getting somewhat better. They lost 23% less than the previous year. So that is good news. They need to keep that direction up, and they are having to dilute you. But good news, Amazon and Porsche are the largest shareholders. So it's kind of backed by Amazon. They own 13%. Porsche owns 12%. Leveraged up a little bit, but I just don't love them because of these net income losses. So that's why I just stay away from Rivian. My side of the bet, I'd rather just own Amazon, which does own Rivian. So buy Amazon, which owns Rivian. So here's Coherent Mining. I believe this is just a gold company. And wow, actually, if we go back to the monthly, that doesn't look too good. But basically, the stock, yeah, they own a bunch of gold mines. These are the mines that they own. And because the price of gold has gone up so much, they're raking in profits. The net income was 70 mil this quarter at a new record. And actually, let me just pull up the real price of gold. Ticker symbol IAU is the actual commodity of gold. And as we can see, it's literally at an all-time high today. So that makes sense why that stock is at an all-time high. And IAU gold is also at an all-time high. So pretty cool. Yo, hey, shout out to the homie Looney on the YouTube stream with the $5 super chat. Yo, thanks so much, Looney. Yo, shout out to him. Yeah, but hey, best way to support me is just watch the stream from YouTube, trying to build up the channel there. So he said DIVB versus DGRO for a 20-year hold. Which one would you choose for dividend growth there? I'll just say, which one would I choose? Let's see. So let's just look at their top holdings. This is the iShares Core Dividend ETF. If we look at their top holdings right here, because these are just ETFs, let's see. Its top holding is Cisco, Exxon, JP Morgan, Qualcomm, Wells Fargo, IBM. These are great top holdings. Like I would almost hold all these individually as well. Not Texas Instruments, but that actually looks great. Now let me go check the other one. DGRO. Oh, I've heard of DGRO. Yeah, so let's see what owns this. It's in this one. So its largest holding is Broadcom, Apple, Johnson & Johnson, JP Morgan. They're both pretty interesting. Like they're both good. That's the thing. Like honestly, both are great. Like I'm sure the returns in the long run will be very similar between the two. Like I really love both of them. Like it's hard to pick. It's like NASDAQ 100 or S&P. Honestly, I probably DIVB. I got to recheck the expense ratios. Hey, Ryan Domingo, what's up, dude? And hey, Joseph, he says, Pan W. I'm sliding more with LEU. Can you explain why CEG is a better player of Vistra? Oh yeah, LEU, I'm pretty sure, is a completely different business model. I don't think they're in nuclear. But remind me to check them out, and I'll go over them. But let me look at, if we go to the Nancy Pelosi portfolio right here, one of the stocks she owns is PANW. This is Palo Alto Networks. It's honestly my favorite cybersecurity play out there. So if you're looking for a cybersecurity stock, not financial advice, this is the one, PANW, Palo Alto Networks. They're a subscription model company. Legit 55% of the revenue just comes from their subscription. And investors love it when they're a subscription model. It's so predictable, the revenue. And if we go to how their subscription revenue is doing, it literally just hits a new record every year, every quarter. Like the growth is incredible. This is a growth company at heart. And they're in the cybersecurity industry. Like a lot of the software names, like Salesforce, like Adobe, a lot of the software names have been getting hit. But cybersecurity is almost immune. Like AI is going to make hacking better, and we're going to always need to get cybersecurity better. And this is the one that's making a couple $100 million net income every quarter, super growthy. I really like Palo Alto Networks. CrowdStrike's another great one. Let me look at LEU stock. Let me see what this company does. This is Centrus Energy. Look at that. They're at an all-time high today. So yeah, congrats if you own that company. Let's see what they do. So they're in uranium. Oh, that's pretty cool, actually. So supply of nuclear fuel and services for the nuclear powered industry. So, okay. So yeah, they don't actually own any reactors. They just supply the uranium. So I know uranium has been on fire recently. So yeah, okay. So yeah, look at this. 85% of their revenue is their low enriched uranium. So pretty interesting. So yeah, I guess LEU or Constellation Energy buys uranium from LEU or something. I like both, so it's hard to pick. Yeah, Lunia. Honestly, just pick both of them. Followed you here from TikTok. Yo, Calvin, thanks so much, dude. Shout out to Calvin. Yeah, hey, TikTok keeps giving me trouble. So like, they remove my live from being in For You page recommendations. They take down my streams randomly. So hey, best way to support me is just subscribe to my YouTube channel. I'm streaming on there as well. If you missed anything, you can replay it. But yeah, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. So yeah. Hey, what up, Akua? Calvin, can you check RR unless you already have, thinking about it hard? So the thing is with Rich Tech Robotics, here's the thing I'd caution about this stock. There's been a lot of momentum around this name, and in this market right now with NASDAQ at all-time highs, the momentum stocks have been on fire. But here's the thing with Rich Tech Robotics that scares me personally. Like, I'm going to just show you the numbers for yourself, then you can just draw your own conclusion. But this is like, they're kind of basically a startup, and they have like a little partnership with NVIDIA that doesn't really make them any revenue. But look at this right here. They do $1 million of revenue a quarter. Like if you're looking for a real robotics play, like if you're looking to trust your money in a robotics stock, I just don't think this is the one in my opinion. Like they lose net income every quarter. The sales are $1 million. I don't think they have any patents or IP. But one that does is SYM Symbiotic. They have over 1,500 registered patents. They're a pure robotics play. They're a warehouse robotics stock. Walmart's their largest customer and also the second largest shareholder. Walmart owns 13.5% of all the shares. Like I said, over 1,500 registered patents. And this one actually has sales. They're not just doing $1 million a quarter. They have real sales. Sales are up 25% after growing 50, after growing 60. So Symbiotic's a cool one, but obviously the best robotics play of all time, not financial advice, is just Amazon. It's not a pure play. But they're the industry leader. Which would be your number one dividend stock if you could only choose one? Needs to give you the best return in dividends, though. Honestly, if just one dividend stock forever, honestly, it'd be McDonald's. This is a monster dividend growth company. Like I don't expect it to outperform the S&P 500, but you get 2%, you get a 2.5% dividend, 2% share buybacks, 2 to 3% same store sales growth. You should like it's this stock is literally recession resistant in my opinion, but I call it recession proof because literally even in a recession, McDonald's does great. Like McDonald's does great in every environment. Let's see. Oh, Realty, yeah. Hey, that's a REIT right there. That's actually one of the few monthly payers. Again, with some of these higher yielding dividend stocks, they don't see. Someone was asking me, like, yeah, he just asked, what would be your number one dividend stock? I wouldn't pick one of the super high yielding ones. Like, here's Realty Income right here. It has a really super safe. This is very safe. A 5.4% dividend, completely safe. But here's the thing: these don't really outperform in the long run. Like Realty Income is lower than it was, in 2019. And so it's the same price that it was back in 2019. So yeah, you get the monthly dividend, but it doesn't really total return outperform the market in the long run. So I like them. You basically buy that to maximize your dividend income, in my opinion. Yeah, I love how, mandatory monthly payment. Yeah, exactly. For some of these REITs, they literally by law have to pay out 90% of their taxable income in the form of a dividend. So that's why their 5.5% dividend yield is normally high, but completely sustainable. They're also taxed differently. Whenever you receive a dividend from a REIT, it's actually taxed short-term capital gains and not long-term capital gains. So you're actually paying 12% higher tax on it than a normal dividend. But that's why I actually own a REIT. They don't do, this is another REIT. They don't do what Realty Income does. This is a data center triple net lease REIT. Realty Income does triple net leases for like dollar stores, Walgreens, stuff like that. But yeah, Iron Mountain is a data center REIT that I own. They have a 3.3% dividend yield. I'm up 6% on them, 62% payout ratio, 95% of the S&P 500 are customers. Pretty cool. Market closing in 9 minutes. Oh, we gotta stay live for another 9 minutes then. Okay. Hopefully we can get a little bit of recovery as the market closes here. Yikes. We're down 0.7% on the day. Looks like the only stock green in here was United Rentals. Okay. Someone said, can we look at Rich Tech Robot? We just looked at that one. It's a dividend king. Yeah, you're right, Jonathan. McDonald's is a dividend king. Another dividend king I own, and honestly, another really great growth company or dividend growth company you've probably never heard of before is Carlyle Group. They've been raising their dividend for 50 years. I'm only up 1.3% on them, but they repair roofs. They do roofing and insulation. Pretty boring, but I really like them. Okay. Monthly dividend feels so good. Actually, I own one monthly paying dividend stock. Sorry, I keep going back to this, and then we'll get to the next stock here. But this is Main Street Capital. They're another one of the few monthly paying dividend stocks. And this one, remember, Realty Income had a 5% dividend and was lower than it was in 2019. Well, this one actually is significantly above where it was in 2019. And you get that monthly dividend, which is pretty cool. I actually just bought couple shares. Actually, that was yesterday. Yeah, we bought 2 shares of Main Street Capital yesterday at $64 a share. And then I bought 3 more on September 19th. Yeah, actually, I forgot. We bought 2 shares of them yesterday. How did I forget about that? Anyway, let's keep going here. MSTY for dividend income. See, I don't love those. Those are the super like maximized. Like, actually, we won't cover that one. But yeah, Main Street Capital has like a 5 to 6% dividend yield, depending on if you include the special dividends. But yeah, 5% yield. Let's see. SES stock. What is that Seal? Is this the Amazon like competitor? Yo, what up, Braxton? Let's see here. SES. Oh, this is SES AI. This is that micro cap junk. Okay, yeah, this is just one of the momentum companies. We won't cover this one. Do they have sales even? Sales of $3 million. I mean, at least it's sales. They have a good balance sheet, but notice the assets decline every quarter. And I'd just be super careful. Again, couple $100 million company with a couple million of sales. So risky. Okay, how's the Celsius? Hey, it's actually pretty good. I got a cherry flavored Alani actually, and there's so much condensation around it now. Barely drinking any. QXO. Hey, we can't look at QXO stock, Edo. I'm sorry. QXO, they just went through their merger. Actually, we could look at Celsius stock. Am I going to get hit with taxes in my savings account with Realty Income? Yes, you are, XYZ Steve, because Realty Income pays a non-qualified dividend, and non-qualified dividends are always taxed. You can't avoid it unless it's in a Roth IRA. But unlike if you make under 50, if you're me, I make under 55K a year, and if you make under 50K, long-term capital gains are taxed at 0%. Can you believe that? So that's why I actually don't mind holding stocks in my taxable account. That's the one. Like taxes favor investors, the low-income investors, because check this out. This is my taxable account, not a Roth IRA or anything. I received a $26 dividend from McDonald's. That dividend was completely tax-free for me because it's a long time. It's a long-term. It's taxed at long-term capital gains because it's a qualified dividend, and I make under 55,000. And I think if you make over 55,000, you pay 12%, or just on the amount over. Exactly why YieldMax pairs work out if you're in the bracket. No, actually, YieldMax ETFs are also short-term capital gains. So YieldMax ETFs are taxed just like REITs. So yeah, those covered call ETFs are not qualified dividends. So you pay the higher tax on those. That's another kind of kick in the nuts for the covered call ETFs. Here's the thing. You're buying an asset that admittedly underperforms the S&P 500's 8% CAGR. So you're buying something that doesn't keep up with an 8% return, and you're paying already over 1% in expense ratio. So already, before you do anything, 1% of your yearly returns are already eaten up to expense ratio fees. Then they have the NAV erosion and the return of capital, where they literally return you your own capital, making the assets go down. It literally makes the dividend income go down in the future. Like you can't rely on those as like a reliable income stream. The dividend trends down by double digits every year. I think the covered call ETFs are a bit bubbly. But some of them aren't too bad. Like actually, one I do like. I actually used to own this one, TLTW. It's a oh, look at that. Again, these trend down to zero over time. But yeah, this one sells. This is one of the better assets to sell calls on. This is the BlackRock TLT covered call ETF. It sells calls on the US 20-year Treasury bond, which I think is something more appropriate to sell calls on than like Tesla, which your call is almost for sure going to get called, and then you lose your shares, and then there goes all your value. And like especially some of these like the MicroStrategy or the Bitcoin covered call ETFs, like those just are the worser ones because the options almost always get filled, and they lose that value. But that was my little rant. I mean, they're certainly appropriate for some investors. If you're trying to maximize your dividend income, you buy the covered call ETFs, or maybe the REITs, the Main Street, the BDCs. That's what I own. For the few stocks I want to buy to maximize income, I bought Iron Mountain. It's a REIT. It's one of the companies that have to, by law, pay out 90% of their taxable income in the form of in a dividend. Same with Main Street Capital. Their BDC, they also have to do that. And I also own them in my Roth IRA because these two companies pay short-term capital gains dividends. They pay non-qualified dividends. So that's why it's beneficial to own these in a Roth IRA. Even if I own them in my taxable account right here, I'd pay 12% tax on it, which would still be no big deal. But it's kind of cool. Like whenever I receive a dividend from McDonald's or Google or any of these companies, it's completely tax-free even in my taxable account. All right. Thoughts on the H-1 visa stuff? Yeah, I haven't looked too much into it. I didn't hear if it's like it can't be good though for like some of these major tech companies. Like I heard like Amazon and Google both have over 10,000 tech employees in violation of this or that have to pay this, or it looks tough. So, yeah, let's look at, King said J&J. So let's do, and he said JP Morgan. You know what? Let's cover JP Morgan because this is an absolute monster of a bank, too big to fail. And honestly, I need to go get a phone charger. My phone is on 6%. But anyway, yeah, JP Morgan, literally all-time high on this stock. So congrats if you own this one. Even though the stock's at an all-time high, you still get a nice yield, a 1.7% dividend yield. They raise their dividend every year. Legit JP Morgan prints money. You won't believe this. They make, and this is after-tax net income, 13 to 15 billion in net income a quarter. Like it's insane the money they make. So JP Morgan's a beast, commercial investment bank, consumer community bank, and asset and wealth management. Yeah, they collect high margin wealth management fees, asset management fees with their investing products, like money market funds or bonds or whatever. Yo, what up, Juan? How's it going, man? Charge, yeah, for real. Powell Industries. Yeah, Powell Industries, this company. Oh, market closes in 30 seconds. Okay. So, yeah, the closing cross. Powell Industries is one of my best performers. Even though they're doing really good, they're still only trading at 20 times net income. Now, that might be justified because if we go to the sales right here, they also just acquired Remstack for a couple, it was like $20 million, but the revenue actually declined year over year, 0.66. It was tough because it grew 49% from the previous year, but they grew margins though. They're making 40 to 50 mil in net income a quarter. They have no debt, 380 million of cash. You get, 0.3% dividend yield. The dividend costs nothing. They legit have so much cash, they make more interest on their cash than the cost of their dividend every quarter. Like, this is a pretty cool company. And I haven't sold a single dude, I bought this company years ago, or I bought it, this is on the weekly. I bought it on January 8th, 2024. And I've just been holding on it's been an absolute roller coaster of a stock to hold. It went like, it's on the weekly, so it doesn't look as volatile, but I've held through some painful stuff. Like, especially this time right here, I was holding the stock. It was at 350, fell all the way down to 150. I lost $200 a share. Anyway, I like that one. Don't probably buy it at this current price. That might go lower. So Jay said Navitas. Yeah, Navitas is kind of a joke. Nothing real good here on Navitas, in my opinion. I mean, honestly, here's the thing. I'll show you the numbers so you can kind of draw your own conclusion. But like, look at this revenue. And the reason they rallied up is because they had some sort of NVIDIA partner thing. I don't know all the details, but hopefully, is it really game changing? Let's hope so, because the path they're headed on right now is toward bankruptcy to zero. If we go to the revenue, it's down 30%. It was only 14 million. Like, they did 14 million in this quarter, a new all-time low. The analysts are expecting it to just continue to climb down, 9 million, 10 million. And they're not just, the revenue's declining, but they're burning through money. 50 mil in net income this quarter. That's what was their market cap again? 1.4 billion. So that's actually a good chunk. So I'd just be careful with this one. And plus another thing, like this isn't really an American company. 65% of sales are Hong Kong, and then another 20% is rest of the Asia. So I don't love this name, to be honest with you. Enphase after, hey, what up, Isaiah? Yeah, so Enphase Energy, this one has really been getting hurt recently because they took away the incentives the Inflation Reduction Act had. Hey, yeah, there we go. Look, boom. Your live is no longer eligible for For You page recommendations or in search results. Hey, best way to support me again, if you guys are any of y'all on the TikTok stream, number one way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but I'm also streaming on there too. If you miss anything, you can replay it. Hey, what up, Free Me? So good to see you, dude. Yeah, here, Enphase Energy, this one, the solar industry is really beginning to hurt right now, but the growth is finally somewhat back on Enphase Energy. Like if we go to their net income right here, it went negative in 2024. Like this company used to make 150 mil a quarter. Then the net income went negative, and now it's actually finally back. So we want to see them continue this nice net income. If you kind of average it out here, they're making like 50 mil in net income a quarter. Sales are up 20%. So it's good to see the sales, come back after this major decline of the sales. So, yeah, it's the valuation's pretty expensive. Honestly, my number one favorite solar play, like good fundamental solar play, if I had to pick Enphase Energy or First Solar right now, I'd probably pick First Solar, just because like this one isn't seeing as much as a huge, like this one didn't experience that huge decline like Enphase Energy did. If we look at their net income, they print money. They're making a couple $100 million in net income a quarter. So First Solar might be worth looking into if you like the solar stocks. Enphase Energy, just the inverters. They make the inverters for solar panels that convert the AC to DC electricity. Hey, what up, Yash? He said MU stock after earnings is up 5%. Oh, wait, yeah, the market just closed. Let's see. Oh, look at that. Micron up 4% after hours. Pretty cool. Let me actually see what else reports this week. If we go to the earnings hub right here, I'll be super quick about this. Is anything important like report this week? Oh, AutoZone was this. Actually, let me just search by watch list. Not really. Yeah, there's Micron. Yeah. Oh, Nike is in a couple days. Well, anyway, the numbers just came out on Micron, so I don't have them. Unfortunately, maybe I can. Maybe someone in the Moomoo comment section. Oh, hey, someone got it for us. Look at that revenue of 11 billion. Oh wow, that's a nice increase. GAAP net income of 3.2 billion. Hold on there. Wasn't it like 2 billion last quarter? So what was the net? Wow, I can see why they went up so much. The net income was under 2 billion last quarter. Like the profits just explode. Dude, the multiple is gonna go down too. Like they could go even higher. They might monster even up more than 5%. I don't know. I again got to dig more research on that, but that was a good EPS beat. I bet. I'm up 130% on Micron, but only bought one share. Hurts, man. Oh, I feel you on that, man. Oh my gosh. Dude, sorry. Why was that so loud? Okay. What is Micron? Micron's like an NVIDIA kind of competitor. They're a computer networking business. Or do you hold any mining mineral companies? No. Hey, what up, Rage? Hey, thanks for the rose there, my friend. No, not really. Mineral stocks. Nope. Because they kind of just sell commodities. I don't really know if those are the kind that'll outperform in the long run, but there is a really cool limestone company that might interest you. It's not exactly, it's kind of a mineral, but it was on my watch list. I put it on here not too long ago. Oh, don't tell me I lost it. No. Oh, here it is. USLM. Check this stock out. If you're looking for a weird commodity stock, this is a pretty cool one. USLM. It's they sell limestone. So if we look at where the revenue comes from, their lime and limestone operations are up 20% after, like, it's really growthy for some reason. And honestly, the net income they're making 30 to 40 mil in net income a quarter. They literally have no debt. This is a completely debt-free company with $320 million of cash, up from $220 million. So their cash pile's growing. They have no debt. So debt-free company with over 10% of the market cap is cash, making net income every quarter, growing. So that's actually, let me actually re-add them to the top of my watch list. I'm actually been heavily watching this one to find them on a dip, and they just don't dip. So sad. Anyway, get a charger. Yeah, dude, I need a plug power charger. Haha. Let's see. I don't know what stock. Hey, what up, Juan? Jason said Broadcom. Yeah, let's look at Broadcom right here. Yeah, dude, I do need to get a charger. Maybe we'll just stream till my phone dies because I'm actually about to end the stream anyway. We've been streaming for over 2 hours, so I do have a slight bit of a headache. I've kind of just been talking in a room for 2 hours, but I have so much fun. I really appreciate y'all being here. By the way, if you wanted to follow button, we stream every single day. We just do this exact same thing. Again, I saw nothing. I have no course book, nothing like that. No. So check this out. Broadcom, a lot of people know them for their semiconductor solutions, but check out their infrastructure software. This is like the main growth driver. Can you look at BlackBerry? Thinking of buying as a long-term play? I actually wouldn't touch BlackBerry. Not real good financials. Maybe we'll look at them next. But look, this infrastructure software has blown up on Broadcom. It's at a record, and it's done wonders for their numbers. Like if we go to the FCF, which stands for free cash flow, record $7 billion of free cash flow, 50%. If we look at the net income, yeah, dude, probably because my phone. Let me get the charger. This is not good. Oh, dude, it spilled water all over my desk. Uh-oh. But yeah, look at this net income. This is the after-tax net income. They're making $4 to $5 billion in net income a quarter. Pretty insane. So actually, so someone said BlackBerry. I'm thinking as a long-term play. Like, here's the thing with BlackBerry. Like, this stock is lower than it was in 1999. So you bought the stock then, you're down bad on your position. But let's just look at their numbers. Let's see what they're doing. So revenue down here. So revenue is down 1% after falling 66. Is that true? Oh, maybe it was some one-time adjustment quarter, but I don't love seeing negative revenue. But actually, this is good news. They used to lose a lot of money, not a lot, but 40, 50 mil a quarter. Now they actually made net income this quarter. So it's good news that they made net income. We want to kind of see them continue to make profits. But I just, nothing's really blowing me away here. Revenue's declining year over year. There are secure communications. What is QNX? QNX, it's up 8%. What about on an annual basis? Like secure communications business. Let's see how this one's doing on an annual basis. Okay. Like look at this one right here. This is in fiscal year, but I'd just be really careful, BlackBerry. Hey, what app is this? Oh, yeah. Hey, what up, Rob? Hey, this is a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's my favorite app. Buy an Anchor charger. I love them. Yo, Anchor is publicly traded as well. They're like they're a Chinese company. Or no, not Chinese. I forget what country. Maybe I can check here. Oh, dude, it's not going to tell me. Oh, wait. Office? It's not saying. Okay, probably Chinese. Anyway, there's Anchor. Do you mind checking BAER? BAER stock. All right, let's see what this one. Bridger Aerospace. So it's $1 of a stock. They're at an all-time low. They're worth $99 million. So an extremely, again, we don't really cover these kind of stocks. I don't love covering these like extremely small market caps because at the end of the day, they're really just not worth your attention. But let's see, most of the time, but let's see, they're in fire suppression. Actually, I like that. Fire suppression, maintenance, repair. So I like actually the servicing maintenance side of the business. Look at that. 2023, it was 48,000. Now it's 5 million. That's actually really cool. Aerial surveillance is up 15%. Well, 4 million. Again, it's kind of easy to grow those numbers. Fire suppression is up 142% to 18 million. So what are their total sales? Sales are 30 million. Out of that 30 million, they made net income on it. That's actually really impressive. Actually, I really like this one. The more that I look at it, Accelerate, like again, I don't love them because they're $99 million market cap, but with probably more than 99 million of debt. But I like them for the growth and the industry. The revenue's up 136%. This maintenance repair business, like it should be reoccurring revenue. I do like this kind of reminds you of like a mini Comfort Systems. So maintenance repair. Anyway, they look interesting. You know what? I'll actually put them on my watch list. Again, if you do like them, you couldn't put them as a meaningful size position just because they're worth 99 million. They remind me of like some of the stocks I own in my Roth IRA, like Innodata. Like as much as I love them, you probably don't want to have them as a huge position. Great stream, bro. The only content I have to hey, Looney, thanks for showing up, man. Do you like General Mills or JP Morgan more? Roth IRA. Or not General Mills, Goldman Sachs. You know what? They'll probably both perform similarly. Honestly, if I had to pick one, I'd just pick JP Morgan. But yeah, Goldman Sachs also all-time high today on this bank right here. And they're at an all-time high, and they still have a 1.5% dividend yield on them. Pretty insane. You know, the bank stocks are good for dividends. Annualized return on tangible equity is 12%. It's up from the previous year. Global banking markets, asset and wealth management. How's that doing? It's down a bit year over year. But anyway, yeah, they make $3 to $4 billion $3 to $5 billion net income a quarter. Yeah, me too, Joel. I love Innodata, but not at this current price. So anyway, final stock here. I got you. France, he says, thoughts on SoFi entry point. So SoFi, this stock, you don't want to touch at this price. You don't want to touch it over $25 a share, but they deserve, in my opinion, to be doing this well. They're actually one of my best performing stocks ever. My second best performing. I wish I owned more of it, so it's not like my best performing in terms of total money, but we're up 386%. Used to own a lot more shares. I'm so sad I sold them. Same with Robinhood. I used to own a lot more shares. I sold them at much lower. I just was a huge mistake. But they really beat I sold them when Bitcoin hit 100,000 for the first time. I didn't know if SoFi was going to continue to go up, but they are, and they deserve to. If we go to their financial services business, like it continues to grow. Like it's so impressive. It's up 105%. Like companies with good growing fundamentals like deserve high valuations. And this is extraordinary growth on their financial services, as well as their lending revenue. It's also up 30% to a new record. They're beating on expectations. The orange line is what the analysts expect. They beat on revenue. They beat on net income. They beat on EBITDA. Like they're super growthy. People are taking them serious. The revenue's up 42, $850 million in revenue. Out of the $850 million revenue, $100 million is net income. So pretty insane for SoFi. I love them. So anyway, that was the stream. I hope you guys have a great rest of your day. By the way, if you want to hit the follow button, we go live every day. And best way to support me, number one way to support me is just subscribe to my YouTube channel. I'm trying to build up my channel. And you can watch the stream from there too. I live stream on there as well. And you can replay it if you miss anything. I know I talk too fast sometimes. I apologize. So if you miss anything, the beginning of the streams are really fun. My YouTube channel is called Nathan Robert. You can just type it into YouTube, or you can find it in the link tree in my bio. Also, in the link tree in my bio, if you want to get this app, if you're looking for a brokerage, it's where you buy stocks on. If you're looking to get into stocks, this is my current favorite brokerage. Lowest fee, no $5 a month. I keep my idle cash in there. If you want to get this brokerage, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So if you deposit $100, we'll both actually get a little fractional share of NVIDIA. So it does help me out. I have these other brokerages as well. Actually, I'll do a portfolio update. But I really find Moomoo is the most useful one in terms of the tools it has, the free features. You don't have to pay $5 a month like you do with Robinhood to get the yield. So yeah, here's my Robinhood account though. This is my main taxable account. This is, if you look in the top left, it's called dividend growth or dividend only. It's my dividend only portfolio. Every stock in here pays a dividend, but most of these, as you can see, are dividend growth stocks like Meta, Google, Constellation Energy. And then we have a Roth IRA, which actually hit an all-time high today, believe it or not. And on a pretty red day, our Roth IRA still hit an all-time high, and that's because of Innodata. They just continue to win, dude, up 95% just a month. Hey, that one, dude, I hope you have a great day, too. Thank you, Franz. Thank you to Radiant. Thank you, Isaiah. Are you on UNH? I actually do not own any UNH. And then, of course, here's my buy and hold portfolio. I got Amazon, Amphenol, Powell, Comfort Systems. This is what's really led to a lot of our gains. Comfort Systems right here, they hit an all-time high yesterday. And if we go to our portfolio performance right here, this is the crazy part. Year to date, we are up 57% in here. And then finally, we have our, everyone's favorite, my Webull portfolio. It's like my risk on growthy account. We're only up 15% all time in here. But yeah, these are all the stocks I own in here. I got some popular ones like Reddit, which is actually down bad. Yeah, they're down 7% today. I got Robinhood, SoFi, Disney, AMD. Ooh, P6. Hey, that one, dude. Do you still have P6? This is a stock I've kind of been talking about. They're pretty cool. They hit an all-time high today. I think they might even continue to win. Super microcomputer I got. Oh, and my most recent purchase, my newest position is actually PODD. Do your own research on them. They look pretty interesting. I bought them at a valuation I'm really not comfortable with paying. That's why I only bought 2 shares. So really, this was like my fun position. And as soon as they go down like 10, 20% more, that's when I'd love to buy more. But anyway, that was the portfolio update. Hope you have a great rest of your day. Hey, Sweet Chin, thanks for the nice words. I really appreciate that. So see you all later. Thanks for the TikTok, everyone on the TikTok stream and everyone on the YouTube stream. Again, if you're on the TikTok stream, want to support me, number one way is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Just type into YouTube Nathan Robert. Thank you so much. And thank you to everyone on the YouTube stream. Y'all are the best. Agadis, Probably saying your name wrong. I'm so sorry. Thanks for the nice words. See you, Looney. Shout out to the member, Looney. Thanks for being a member, man. I do appreciate you. See you, Professor Pumpkin. Oh no, I just ended the stream.